critical.
To the president in the United States. And now it's no longer just a political matter. It has moved into the realm of, as the White House keeps saying, sedition, treason. These are very heavy charges. And so I come back to the peace deal in Ukraine. The president is increasingly of the view that Europe is the main obstacle, that China, Russia, the Middle East can all come to some kind of an arrangement, but Europe won't allow it. And when I say Europe, for Americans, that includes Britain.
The administration basically views most European governments as part of their political enemy group. They basically side with kind of woke leftists, Democrats, people who want to defend the old rules-based international order that they say never existed and was just a cover for all sorts of nefarious transactions, and they're not interested. So they basically lumped Western Europe in as one of their political enemies. Do you think that's exaggerated?
I don't think the right way to put it is lumped in. I think that they feel they are increasingly identifying the sources of opposition and undermining efforts to their efforts to prevent World War III from breaking out. I think, that's a different thing from just lumping them in, because it implies there aren't genuine issues. And I think there are some genuine issues, and especially once we get into things like the Soros networks funding the non-governmental organizations, which were very deeply rooted and active throughout Western Europe. And, were they really doing what they said they were doing, or were they part of a racket that was actually shipping money back to the opposition to the president? And this is why you have to remember, in the US, we're in this extraordinary moment where the president of the United States is on the brink of bringing legal charges against the former heads of the intelligence agencies and former presidents.
Wow, well, there's a lot to get into there and a lot to think about. But Pippa Malmgren, thank you so much for your time today.
Thank you.
Thank you.
That's it.
Cheers.
That is our deep dive into the Greenland.
Thank you. Cheers. 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 Lovely to have you. Lovely bubbly. Lovely bubbly. All right. It's noon. So people are at lunch. Hi, Pat. You made it in first. I understand why I don't see the names the way I used to. I don't know why. How are you, Jack? Good afternoon. Fast Eddie. Not as fast as Pat or Jack, but welcome. Jack picked up 72. That's great. I'm so tense. I'm sorry about that. Just even a little sound like that gets me. So sorry. Voice to text didn't help. Once you get a chance to get down, okay. All we have to do is be patient, but I would add to that, Eric, we probably have to set it and forget it more than be patient. There's those that want you to right size, whatever the heck that means, your investment. And of course, that's a personal decision. I personally think the right size is at least moving all of these bottom fishing, speculative, high risk, short squeeze, Charm Boy plays, move them all into Railtown. That's a minimum. Add more than that too. But an investor has to ask, do I want to be an AI? And I'm the more I examine it, as we did together with Wong, I forgot his first, Jensen Wong, and Dr. Sue. My gosh, the enormity of this change in platform, it's just gigantic. And it's just data, store it, manipulate it, do it real time. And everybody, and it keeps growing. As you have more, you have more. It's so I think you're in the right mindset if you think you should own some AI. On the other hand, others may tell you it's a bubble, it's technology moves too soon. But I heard an interesting statistic. It took, the internet was built, I guess, from the 50s, 60s, and 70s onward. It was mostly a government military thing, I suppose. I'm not pretending to be a genius on it or a student of it. But I don't know what to call it, the consumer or the commercial internet came probably slowly in the 90s, and then it accelerated into a bubble, which crashed, and then huge fortunes have been made since then. Bill Gates cheated on his wife, and I thought they had already divorced, but I guess he just gave her $8 billion. Well, that kind of wealth has been created after the 2000 crash in the internet. But it took all those years to build the wires, the foundation, the connectivity, the infrastructure, if you want to call it, the cell towers, the cables, I don't even know what all is involved. But it took 30, 40, 50 years to build it out the way it is. They don't have to do it's built. They don't have to do that this time. Also, something like 5 billion people use mobile technology, 5 billion people in the world. That's all based on, I guess, if I'm saying it incorrectly, you can correct me, but it's all on broadband, which was installed over the last decade and a half. It's installed. It's there. So this time you don't have to wait for that. You do have to wait for the data centers, but the NVIDIA chips are ready. The LLMs are ready, but they'll evolve into something completely different, I'm sure. But they're ready enough to get started. And when you think in terms of 5 billion mobile users, phones, iPads, I guess Wi-Fi. I don't know how Wi-Fi fits in there, but our the information we get as we're driving, and so on. It doesn't take much to imagine how easy the transfer of all apps to AI apps, and then the transfer of use to those apps is going to be. It's going to be very rapid. I don't think you're even going to necessarily make the decision, but the services are going to go up. I think the monthly costs you pay to your providers will probably go up, but the cost of compute or whatever the hell it's called, and the cost of this thing called tokens, which is how they organize little cells of data that can then be manipulated. The cost of all that is going down. So companies are going to be just generating this platform shift. They're going to be starting to see revenue immediately. So that's just one thing to consider. This time is different, is something you don't want to hear when you're investing. But in the technology world, this time is different. In terms of investing, it's not going to go straight up. Nothing ever does. And there could be great panics, because I'm going to show you something from just, I think 6 months ago. We're all animals. Money, there's nothing more important to us than our money. Not even our love, not even, probably not while we're here. Probably most of us have a hard time being Sister Mother Teresa, which money's what we have experiences from our childhood, struggles. Some of us have great fortunes, and then we lose them, or we have successes early and we keep them. But everybody's experience with money is intimate, and it's probably the most important thing in their life. So as animals, as a herd, we panic sometimes, and you have these great crashes. Also, we get greedy, and bankers, they're no smarter than you are. Bankers, they have all the data, and they might have gone to learn better ways of analyzing it and processing it in their brains and in their strategies. But in essence, they're just human beings, and they get greedy, they overextend. I think I've been thinking about going to this SEC press conference, which I think it'll be a waste of time. But one of the things I would ask, if they won't take questions, or if they do, they won't listen to the formulation of the question very long. And then they'll say, I don't know, some palliative, some patronizing, or there's another word I want, but it's okay, everything, just comforting. But when you think about it, when one thinks about it, not in the big markets, not in the big stocks, but in any stock under $10, and in stocks in the private equity channels, there's no price discovery. There's really no accurate way of honestly finding price discovery. Now, it would always be in sharp ups and downs because, again, it's the more speculative part of everything, and we're all subject to fear and greed at any point in time. But the private equity channel, they create their own values and walk it up. And I saw in the New York Times, I don't know why I don't read it anymore, but I saw today an article on the IRS doesn't even know how to pierce those private equity and partnership companies. So those valuations are created almost like a Soviet style from above. The banks know what it should be, rather than the to and fro and the bartering of people with their money at risk each time. Well, that's on the high end. On the low end, you know what happens. The heaviness suppresses everything. And there's no buying, there's no research, there's no banking, there's no real fundraising. And so you get this whacked out situation where companies like Railtown they got out there before ChatGPT. They went out on their own, they went early, they need to raise money, so they go to the markets. The markets, they've just gone off the edge of the cliff in terms of integrity, and they are not a place to go to raise money unless you already have money. So luckily in Railtown's case, we escaped that punishing destruction of the cap table. We are experiencing the go-to model of these genius Wall Street strategists. Just sell. I bet the same 52,500 shares are on the ask now. They couldn't get it off. Now it's 42.5. They couldn't get it. There it is, 52.5. They couldn't get it off at 69 cents, and they haven't been able to get it done all the way down. It's all manipulated. So that's what I was thinking about. There's no fair way. There's no capital formation at a fair price. We all know there's risks, but the pricing is all out of whack. All out of whack. So anyway, one of the risks in AI, of course, which is a broad term, is these bureaucrats. They're bankers, so they're not technically bureaucrats. But when you compare it to what should be a free market system, we don't have a free market. Pricing decisions in the AI space for funding are being made by a handful, mostly men, but I'm sure there's some women up there now, in the investment banking world. And then that's true of the big companies. They're making decisions in this, we better buy it or we're going to be, it's kind of like you see in the Western movies, the bad guys kill the son and witnesses. They kill the son because they don't want him to grow up and come after him. And that's kind of sometimes why these big companies buy the other companies. They don't want them to grow up and be the head honcho. So they just buy them. There's an aspect where it's all funny money, but it's real. This is a serious, serious uh, uh, transition that's going on, and there's almost, you know, I don't know if you'd call it panic, but maybe frenzy to just make sure. Even a Google has to worry: are we going to maintain our standing? I think I was reading that they've got a chip. Oh, I heard it. They have a chip. I forget the name of it, but the gentleman pontificating on it said he wasn't sure they're going to sell the chip to the world. They're just keep it inside because they don't want to give up their competitive. It'll create a competitive advantage. Anyway, I think Railtown, because the founders were early and because Wall Street, the general Wall Street wasn't ready. Maybe there were some pockets of people seeing what was coming, but in general, no one was interested. They had to go public to raise money. And they did that in Canada. Of course, that opens up to the tremendous fraud that goes on in the Canadian junior markets. And then, thinking he was doing the right thing, he wanted to come down in the US markets, which are so much bigger, and he qualified for the over-the-counter QB. Sets up a complete fleecing of company CEOs, teams of bashers, gentlemen on X, so-called financial advisors, even attorneys. I submit that Canaccord Genuity's in on it, not everybody in there. And then people from offshore. And I mean, this system it's been up and running so long. It's a perpetual mining machine that rarely goes wrong and never needs to be adjusted. And there's some losses every now and then, cost of doing business, but in general, these thieves, who probably are an extension of your own retirement funds or your own mutual funds, or if you're wealthy enough and you're in a hedge fund, it's probably coming back a little bit in returns to investors that way. But no one wants to believe it. People still believe that the stock is where it should be, that when are you going to give up on Railtown? Well, that question means you're a trader, you're a day trader, you're looking for a hot trade. And I do recognize that I had urgency in this, in the acquisition of shares of Railtown. But I made it clear it was not hot money. It's not hot money. It shouldn't be hot money. And what I see is a mispriced stock. Now, you could see it the other way. You could see that the entirety of Wall Street is mispriced, from Cohere to Windrift to, whatever name you come up with. I think that's a hell of a courageous bet, to bet against the trillions of dollars that are going to go this way. But you might be right. Certainly, if you want to measure things in the short term, I mean, think of, I've never owned a horse, but I've been around them a little bit. And horses can go from trusting to jittery just like that. And you're like, what the heck happened? And that happens in a market, particularly in a transforming, evolutionary, revolutionary industry. So nothing goes straight up. Well, you said it was going to, go to this, and this, leaving out the obvious observation that the company's not even telling its story yet. I guess they did a trial run with the shorts, and with me, an idiot YouTuber, I guess is how they see me, just like the guy that represents the shorts, in my opinion. But hey, maybe they're just trying to go to their, trying to run the presentation to the choir first before they go out. I mean, I used to do that when I call clients and I wanted to present, a new offering. I'd go to my friendliest first, just so, one, I would hear the questions, and two, it would get straight in my mind, and then I could go to the people that would hang up on me if I stepped a foot wrong. So maybe he's doing that, but in essence, he has not been able to broadcast his story everywhere yet. And also, I still think people are on vacation. That's what I think. So maybe it'll be next week. But I have a clue here to share with you that I think it's going to be February, end of January, probably February. Because one thing you remember, in a very real sense, Corey that I'm talking about, he doesn't have to tell the story. Really, until TELUS or however it comes out, releases whatever news is necessary to lift the whatever the standstill agreements that all these investors signed, or the whatever you call it. There isn't a word for it. He doesn't really have to do it, because once TELUS is comfortable announcing that they're ready to open this data center, I think the razzmatazz surrounding that, it's going to generate interest in Railtown. But then I think he'll be telling the story. So right now, you've got a stock that came out early, went public, therefore it's not in the private equity channel, which gives you a chance to buy it, by the way. But you go through this, and you have all these people trying to natter at you that I'm somehow wacko, which I'm sure I am. But I have nothing to. I don't show up at 7:30 at Railtown's offices and work till 11, and then show up the next morning. I don't go in and type code. Whether you think I'm wacko or not, it's, do you want to be an AI? How do you get into AI? Yeah, hedge fund. You get into the latest ETF that your brokerage is offering. They get 8%, 10% right off the top. Or do you get into a brand new mutual fund? How do you do it? You buy NVIDIA? Do you buy Cohere? At the, I don't know, I don't golf, but at the golf club, the golf course, you heard a story. Your buddy has a new AI idea. It's called It's called G-Bucks. G-Bucks is getting into the AI space. They've just created a ADK and an AI agentic framework, and it's going to revolutionize foundation giving worldwide. And oh, that sounds great. Where do I sign up? This is private or is it public? Well, yeah, okay. Well, there's going to be a lot of those kind of companies that, however well-meaning, are going to miss the boat. You don't have, imagine if you were sitting at, I don't have a memory anymore. I don't have a memory anymore. I hate it. I can almost, it's right on the tip of my tongue. Tadish Grill. Imagine if you're sitting at Tadish Grill in San Francisco. Well, it probably wasn't open. I don't know how long it's been open, 150 years, something like that. Anyway, imagine two things. That the Tadish Grill was open back when the gold rush was going in San Francisco. And you've come in, you have some cash you want to invest in the gold rush. And so a friend of yours organizes a meeting, and you're going to meet Jake, and he brings out a couple of toothless pictures of his partner and a mule, and they show you a map that has a bunch of beer and coffee and cigarette spittle on it or tobacco chew on it, and they pick a point where they're going to go. You go, wow, I thought you had a good investment here. That sounds a little bit like you're just winging it. No, we're going up. We got this place. We're gonna find it. And then you look around the grill and you see a bunch of these prospectors seeking funding to go up. Wait a minute. I don't want to risk my money that way. In other words, you don't want to buy every single little brand new G-Bucks that puts AI in its name, or they'll be coming. There'll be plenty of them coming. AI this, AI that, and maybe you just say, you know what, that just sounds. I don't have any advantages in analyzing these wannabe companies. So then you're in that little booth at the Tadish Grill with your friend, and then the prospector and talking, and you finish your meal. They swing the curtain back, and as you're walking out, you sit at the end of the bar closest to the door. You say, why don't we, the prospector goes, and you sit with your friend. Why don't we have a drink? I want to talk to you about something. And you ask your friend, you say, look, why don't you stop introducing me to every hee-haw guy that comes around, every prospector. I think it's too risky for me. Do you know any of the suppliers of blue jeans, of mining sifters, the pans, of picks of food, of other services. Do you know any of the people and companies who are providing what the miners need to go up and prospect for gold? I'd rather, if you know any of those companies who aren't too expensive if they're public, or if maybe I'll get in on a deal, but I'd rather buy into a company like the Acme pickaxe company that's going to sell pickaxes to every one of these people that were in the restaurant, rather than me trying to pick out the best one. All right, let me get to work on that. So then you go out and you try to find those. You try to find Levi's. I think that's where Levi's got its start. I think Stanford even started a bicycle business out there, automobile. Oh, there's another, trucks. You sell the trucks that they go up the hills for. So that's, by the way, that's how Wall Street VCs think. What's under the hood? And in the case of Railtown, you're going to have the TELUS data center coming out of the gates, but TELUS is going to be the one seeking customers. Instead of one fishing rod at a time, they're going to toss out a huge net between two giant schooners and scoop up the entire school of fish, leaving the oceans bereft of food, bereft of fish. But China's hungry and Japan wants the whales, but they're going to scoop them all up. So where Railtown is, they're not having to cast one fishing rod at a time, or get a group of people, or go to a pier and they sell to a whole group of fishermen that are throwing their. No, they're actually via TELUS in Canada. They're exposed to every single customer out there, basically. And TELUS is going to do the acquiring, and they're going to be telling the story. But Wall Street will look now. What's a NAND? What's a DRAM? What's a CPU, a GPU? I mean, I know the little blips I read, but I don't really know how important all these things are. But they'll look in there. Who's providing this? Who's providing that? Who's providing the semiconductor chips? Oh, NVIDIA. Well, that's good. Well, we already own that. That's Cohere? I thought Cohere was overvalued. Let's run those. Sally, why don't you run those numbers again for me? And then now up top here, isn't this usually where there's a mixture of people at top of these data centers? I should start trying to make a list. There are smaller ADKs. Are they going to use Google ADK up here? Oh, no. They're going to be Canadian. Well, who does it for that? Well, there's an interesting company. It's been around 6 years, Railtown, Canadian, and it looks like they've got whether it's a monopoly or not, they're part of basically they have first crack. Al, why don't you get me some information on Railtown? I want the full soup to nuts. What's the size of their market? Are they on top? If you can call in, get what you can. Let's see where we can apply our funds money into this TELUS first sovereign AI data center. Let's see if there's some opportunities here. That's what will happen. So we have to get through this annoying, soul-crushing suppression of the price for short-term interests of sating the greed of these criminals. But they've been doing it so long, they don't think of themselves as criminal. The hedge funds allow it, the attorneys allow it, the regulators allow it, your brokerage firm allows it, Bill Clinton allowed part of it. I would argue Obama allowed part of it, but all presidents ignore it. So they start thinking, hey, it's all good. So it's 24.05. I don't know that if it's traded at 24, so that slithering eel of a guy that's antisocial, he said he's going to wait for 24 cents. Well, maybe he'll get it. All right, let me show it. Let's go through. I better go through your, I'll lose your comments. Hey, Pat. All right, you guys. I was thinking about all right, E. Belanger. 10K. Wow. I can't believe it. In Canada, 34 cents. So in the middle of the night, you wonder, what's wrong here? The market is saying something. All the others, this is what happened to all the other stocks. I will admit that if you're a trader, I didn't protect you from 35, 40 cents down. I didn't. It's not that I have said over the last few weeks that it's going to be soft, but in general, I didn't protect you. I didn't protect you. I didn't say, hey, you better get out at whatever. I can probably find a chart that in retrospect shows it. You should get out at 40 cents and it counts down to 25 cents. I didn't protect you from that. But I wasn't trying to day trade it. I was trying to make sure you own your position. Because eventually, and I didn't know, I think I know now, based on my conversation with Corey, but I'm not sure I even really know it. I'm extrapolating, but I don't think. Well, I'll give you a clue. I asked him. I said, well, he said, you know, if you want to come back and after you've reviewed this, we can do this again or something like that. And I said, well, maybe next time you'd be willing to come on in front of the people that listen to me regarding Railtown. And I told him we had almost 17 million shares. And he said, sure. But he said, why don't we wait until after further news? Why don't we wait until there's additional news? And then I can come on. So, and I think he mentioned TELUS. So none of us knew that this TELUS thing is going to take forever. But the flip side is people like Eric are buying more shares. Hopefully you're not dumping out of it. I think Brandon's friend could reestablish his position. He probably won't, but he has a chance. So there's a good side of it. It is uncomfortable though, and you wonder, well, where am I wrong? And maybe this is going to go. Maybe Corey's terrible. They're lying. They don't really have anything. It's like that law firm that was going to go into GTII. Well, don't mix your sources of information. Don't mix your sources of information. Just because you got a bad, whether intentional or not, you got a bad snow job on one stock doesn't mean that's here, but so it goes through your head. The other is, well, maybe the technology that they've been blown apart by Langchain or Google ADK or NVIDIA. This is risky because they spent 6 years, but they didn't spend a lot of money, and you know, Palo Alto can put hundreds of billions of dollars to any problem, and all of a sudden it's all going to be worthless and meaningless. Somebody else will come out with the product. Well, I think the people at AIP, Dr. Tom Core, Mike Norbrega, and John Ruffalo, would not have allowed their company to be purchased in exchange for shares of Railtown. So they transformed their own company into a bet on Railtown. I don't think they would have done that unless they believed the technology was, as the company says, battle tested and ready to go. But you know, you may feel differently. The other, like I said the other day, the only other thing that's a threat to your money here, I think, of course it's my opinion, is toxic financing. They have none, and they don't need to accept any, and they won't. It's always a risk. CEOs can be seduced. But I really don't think they need to raise any money in the next 45 days, or for that matter, 6 months, before monthly revenues start coming in from TELUS. So I think we escaped that quicksand. The other risk is not so much that you're going to lose money. It's just that some of the high numbers, some of the rate, I believe if it works, Railtown is going to be one of these huge components of the, I guess you would say, of the data centers, or I don't know, I don't have the terms, but it's going to be something embedded everywhere. But it may be called Railtown, but it might be owned by Microsoft or somebody else. So there's a chance, I think more than a chance, that simply putting revenues down, applying a multiple, dividing by a number of shares, which is the only way you can measure these things, might not be enough in terms of coming up with a target if you want that stock price to be achieved when your stock is called Railtown. Yeah, I think it's possible, likely, that the company gets purchased, I mean, ideally, I think when you compare any of the buyouts out there, you know, ideally it's 40, 50, $60 a share or more. I mean, you can look at some buyouts and it's over $150 a share. That would be ideal because then we'd end up with more stock, let's say, in Microsoft. But from Microsoft's standpoint, they want to nip it in the bud, and the company, I think, would consider it. So there's a chance that if I think this company is worth $55, to use the number that Tony, the diligent, ridicules me for, it's a company with no revenues. Guys, if you don't recognize a basher, you're just going to get suckered in. You're not buying this for current revenues. And nor did Sequoia at all invest at 1.25 billion in LangChain for revenue, for current revenues. Projection. But it sounds good. No revenues. Anyway, I think $55 is where it's going to go, but it may, or higher, but it's not going to get, maybe not necessarily going to get there when it's called Railtown. So I don't like that. I mean, if they sold the company for $15 to Microsoft, his argument, Corey's argument would be, well, Microsoft is going to go up. But I don't, yeah, and it may be true. See, I'd have to study that. My skepticism kicks in. Microsoft is already so big. How much bigger can it get? But it may be. I'd much rather get our rate of return in our own stock before Microsoft buys it, and then I'd feel better. That's amazing, Eric. That is amazing. Ward Richardson. Wow, Ward. $4,273 cash cows. Julius, this is the place to be. Let's go Railtown. Well, I hope so. I hope it is. For people who have gone through my tensions and all that. Hey, Giuseppe, hello to you. Giuseppe, I knew the road was long. The road is long. But I just didn't know it'd be this arduous. Yeah, but I think I'm about to show you something that I think will give you you know, there's light at the end of the tunnel, but I think the light is already in the tunnel. I'll show you. So averaged up or averaged down, I guess. Oh, sorry, averaged up all 25. Sorry, I didn't see that. Now averaging down. Wow, Giuseppe. Both decisions were correct in my opinion. Dollar cost averaging sometimes is up. Now it's down. But I think it's the right way to acquire. And perhaps that might have been a mistake of mine. But I still, it's easy in retrospect. I was, and I am still, by the way, I think you need to buy it. And the dollar cost averaging is what you've done just because it's taken so long. I wouldn't spread it out, but I've been wrong on the price. Um, I don't know when TELUS is going to act or when. I mean, just to pick on a buyer, Mavericks is going to start buying shares. But once it happens, you're not going to be able to buy the stock down here. It feels like we probably have more time, but if I predict that, that'll mean we have no more time. Good job, Giuseppe. That's a huge position. Jason Harbison. Bravo, you guys. Bravo, Jason. E. Belanger. We are near the 52-week low. 32.5. The bids are at 33.5. Well, I would, absent some surprise, they're going to try to get it to the low and break the low. That's just what they do. And then all the same fears are going to come back in. We can't help it. It's going to be, oh, this is just like GTII. They said they were doing this or that or that. I think Railtown's just it's like, hanging out, smoking cigarettes in the boys' room or walking into Capitol Grill for a cigar. I mean, it's just a different experience. That's an odd comparison. But I do think they will not only try to hit the low, they'll try to press it below there. But they're pulling a rubber band as far as they can stretch it, and it's going to snap back to the highs or just under the highs. I showed you the chart. That's what that pattern suggests. It could be the one time the pattern doesn't work, but and those patterns, whenever you have a pattern, if they break the downside of the pattern, well, then it didn't work. Will Underdown. William, are you going to be at the press conference Monday? It's not Monday, it's Tuesday. Or is it Monday? Today's the 9th, so 10th. Yeah, it's Monday. Thank you for reminding me. Wow. That it's Monday. Okay. I better write that down. I just wrote down January 12th. I haven't decided. If I go, I'm not standing in front of the truck. I'll tell you that. I'm not doing that. Ward Richardson. William, here is a good example of how fast money is moving into, how quickly, I guess you mean, not fast money is moving. Anyway, you're correct in either way, but I was just misreading it is my point. How quickly money is moving in the AI industry. Anthropic at the end of the first quarter of 25 had a $61 billion valuation. Oh my gosh. And it's going to IPO at $350 billion. in mid-2026. Well, it's an interesting point, Ward. Right now, for me, I'm not talking about you. You guys all seem to have money. I couldn't buy a big position of, let's say, NVIDIA, or of, what's this one? Anthropic. I don't even know if it's public. But by owning Railtown, if this theory of what's going to happen is correct, you can start with, for example, what you have is a large position of Railtown, but that can suddenly, not suddenly, but maybe in a handful of months, that can go up in price, and maybe somebody tries to buy the company, and maybe a bidding war starts. That would be the good thing. And so you could end up, I don't know, if right now you could buy 100 shares of Microsoft, you could instead, if you have Railtown, I don't know what 100 is. Yeah, so 100 shares of Microsoft you could buy right now. If instead, and I'm not, everybody has to do what they will. If instead you were to buy 188,000 shares of Railtown, and Microsoft were to buy Railtown at let's say $4.71. So for every 100 shares of every 100 shares of Railtown you have, you'd get 1 share of Microsoft. So instead of having 100 shares of Microsoft in this made-up scenario, you might have 1,884 shares of Microsoft at just under $500. So it's a way of lifting the account into a meaningful, I don't know if you'd call Microsoft blue chip, but I suppose you would, but getting into stronger companies. So Anthropic was 61 billion. It's going to IPO at 350 billion, and it's expected to reach $1 trillion this year. Unbelievable. Michael Lonsky bought 2,000 more. Oh, great. 40 is a great number. Thumbs up to every B. To every B. I think he means to you, Eric. Hey, Steve, how are you? Ward Richardson, try this again. To everybody buying today. To everybody buying today. Buy until it hurts. Rail engine. See, you like rail engine. I think you're onto something. And I'm about to show you. Gonium? Gone Om. Hi, William. Hope you're doing well. I learned my lesson, and since last year, have not invested in stocks in the over-the-counter. Manipulation is rampant everywhere. Hope Railtown does well. For all is invested, best wishes. This isn't about best wishes. This is about making you nervous about over the counter. Just broadly sweeping. But anyway, that's like saying, I'll never marry a Chinese woman. And so the perfect girl comes to you. She's smart. She's, classy, beautiful, laughs at your jokes, makes you laugh at her jokes, reads, can handle a conversation, travel, whatever's on your list. And then you ask her, so where are you from? Are you from Europe? Oh, no, I'm Chinese. Oh, I can't marry you. I said I would never marry a Chinese woman. You shouldn't be an investor gone home. You should, but you're not. You're short. It drives me crazy. Guys, they come in, their best wishes. They're offering you friendship. Look, gone home got caught. His computers caught him out, or somebody in his circle of friends, because on the over-the-counter market, when Railtown announced the MOU and the other trigger words the computers picked up, they just started selling. But Railtown is not an over-the-counter market stock. It just isn't. It's trades here, but it's a Canadian junior market stock. Not that the Canadian junior markets are any better, but it really is a Canadian stock. And up in Canada, people do invest. There is research in lower price stocks. So, but he wants you thinking this is just like any of the other over-the-counter stocks. That's the whole game. Yes, it's under attack. Yes, it's been destroyed by the criminal clack of counterfeiters. But it's unique among all those manipulators, and he knows all about it. He's part of the manipulation. This message is part of the manipulation. He's part of manipulation is rampant everywhere. Gone home. And so he wants to warn you like he's being... Anyway, I'm going to move on. It's just a thank you for your best wishes. But also, please, leave your FUD elsewhere. Such an inane comment about the whole market, which I've made that point all along. This is our escape. Once this works, which is still an unknown, once it works, we don't have to be back here with Gone Home ever again. Don't have to listen to him. You'll get advice from a Morgan Stanley Wealth Advisor or a managing director at JP Morgan. Joe Marty. Oh, sorry, Julie. You got a good pickup there. That's a great pickup, Julie. Added. Wow, you guys are gonna all. I'll start a black car service, and I'll be your drivers if it all works. Joe Marty, just think of this as a piece of mind if you're worried. The AIP founders are huge Canadian players in AI tech. Absolutely. Absolutely. And financing for AI tech. They do have big connections. And they did see what rail had. Absolutely. You couldn't be in with a better group of those guys. Absolutely. I think it's a little bit absent-minded professor as it was to getting all the signatures on the acquisition or whatever was holding it up. But that doesn't take away from that's just process, That doesn't take away from the experience in finance, the connections, the experience in technology and AI, the huge commitment to making AIP uh, imitative, replicative of the Constellation software story. So I agree with you. Seems like the shorts like to follow your stock picks, William. Is it personal or business? I don't think it's, well, maybe if it's the latter. I don't think it's either one. These shorts, they need you buying the stock so they have something to steal. So in a way, they come out here and they ridicule me and trash me, but in a very, they're like parasites, and they need an organism to suck off of. And in a very real way, I provided that organism. I didn't mean to. It's not like I was trying to. I have not been paid by anybody. In fact, anyway, we all go through periods of time, but they need retail, money's coming in, so they can start their walking it down, colluding and computerized and spoofing and layering and putting the same 52.5 on the ask every single bloody day. It doesn't happen with a stock that has no buyers. There's no volume, there's no money to steal. So I don't think it's personal. Maybe you would call it business. I just think it's where they found a bone with marrow in it, or they found a bone with meat on it. And it works, Richard, because again, no one wants to accept it, because I guess in this world of instantanea, we've lost our ability to delay gratification. Um, uh, and I'm not saying it will be. There's still risk. I'm not saying it will. I think it will be very gratifying, but all right. Let me get back to this. The problem with Railtown in Canada, there's two dozen investment banks. Those the investment banks up there who have heard the story of Railtown recently because they were pitching it or trying to, they cannot buy the stock. They can't recommend the stock. They can't solicit orders for the stock. Those bankers and banks and etc. who heard it and maybe didn't sign something, they are also can't buy it because they are in possession of material information. We now know one piece of it. They had to know about this TELUS arrangement, you know, pretty material. But that announcement, the criminals always press all good news downward because there's no research, there's no trading desk, there's no retail brokers advising their clients to buy the stock. There's no morning calls saying we should be buying this stock. There's no institutional buying. There is nothing on the buy side. So when good news comes out, they press it down. The heaviness continues. And you and I train now that everything's a day trade or a swing trade. Everything's a hookup. Everything's it's like investing by Tinder dates. Swipe this way, swipe that way, swipe that way. Oh, that worked. We're bored. Let's try somebody else. That's not what this investment is. But all of the institutions, on the financial institutions in Canada, I think fit in a category of one. If they know about it, they can't buy it. If they don't know about it, they haven't heard about it yet. And if they're a research analyst that is following TELUS, and TELUS makes TELUS's pitch to Scotiabank, I am sure if that analyst wants to keep her business with TELUS, or that bank wants to keep their business, they have to honor that that is material inside information. They cannot mention Railtown. They can't buy it. They can't recommend it. The story cannot be acted upon. The story isn't known, and it cannot be told yet. The story, if known, cannot be acted upon yet. That's just the way it is. It's just the way it is. So the people here, like Julie and Michael Lonsky and Jason and Giuseppe and Ward and Eric and Jack, they're acting. They're acting. They know as soon as the sun goes down, the mosquitoes are going to come out, or the fireflies are going to come out. Whatever. As soon as the damn news comes out, it may not be news though. It may not be news that makes it run. The news has to be the news that allows the company to tell their story, allows analysts to write research reports, allows institutions to ignore the fact that they signed a standstill or a non-compete or a confidentiality agreement. And it allows stockbrokers and wealth advisors and managing directors to solicit orders to buy the stock. That's been missing. You can't accept it. I'm not picking on you, Richard. One cannot accept it. Our brains cannot accept it. Oh, the markets are always fair, always were fair. When I was growing up, I've got a lot of experience. I've been trading since I was in my 20s. Well, it's changed. It's changed. And I'm learning that lesson myself. You know, the rules aren't enforced. Anyway, we don't have to go through the whole list anymore. So you've got a stock here where I don't know if you know the story because I'm doing my best to interpret it. I was wrong. Information that I thought was pretty useful. There was a client at Merrill Lynch, not mine, I forget who I don't know if he was my phone partner, but anyway, we shared the same. Back then, you'd had one Quotron between two. And he had a client, I can almost remember his name, but he always would call up, and that guy's still a great broker, call him up and say, you always lead me down the primrose path. He's like, and he gets all mad. And he said, I remember that line. He told him, for the commission, you're upset with the commission I'm making? Because we used to charge commission per trade. He said, the commission I charge you doesn't even pay the, what is that when you're a member of a country club? Doesn't even pay the monthly amount he probably just said dues. My monthly dues at my country club. I said, you can't say that. He said, well, anyway, I don't know why I just thought about that, but I don't think it's personal, Richard. I think it's, for them, it's all business. And they don't care. They really don't care. They sit together and have fun. But I'm a source of buying in this stock. And so on the way up, it helped them. And that's why talking to the shorts is not useful. But CEOs can't help themselves. They don't know. So by talking, the shorts get the information that, nothing's happening for the next 90 days that you have to be worried about. Any news that comes out, you can suppress the price. They're only scared of, if they understood it, the magnitude of the TELUS deal. But it hasn't been described yet. Well, if it's so great, why isn't somebody buying? I don't know. I don't know all the things that go on. I don't even think a whale would move this stock right now. But just ask yourself, whenever you buy it, in the United States, in the over-the-counter market, do you ever get it? Does it ever go off at the ask? Ever? I don't think our buying moves the stock. It's a Canadian stock. But anyway, that's a long answer. I don't think it's personal. Matt, wow, Matt, good for you. I think they're like Willie Sutton. We got to have a broader word than short, because it's a whole coordinated attack. But they attack these stocks because it's where the money is. Good for you, Matt. 15,000. That's awesome. At 25 cents. So you tripled up at 25 cents. Unbelievable. That is why I keep going. That's great for you. All right, here comes diarrhea, the pool of diarrhea, the dark pool of diarrhea. Why didn't you reach out to Corey earlier last year to get the insight you have now? that would have kept you from yelling at everyone, you may not have another chance at this price while it tanked. Well, number one, I don't think I yelled that statement at everyone. There's times I would raise my voice, but maybe I get dramatic. I don't know. Dark pool of diarrhea. The fact is, I did reach out. That's the fact. For 6 months, 7 months now. So you don't know what you're talking about. But I never had a chance. I spoke with Corey, I think, approximately 2 weeks ago, I think. I probably have the date written down here somewhere. But he or someone spoke with the guy on Twitter, so it might be a better place to get information. I did notice. I think maybe here that here I don't have a date on it, unfortunately. But in the summer, or in toward the end of the summer, I did talk. I should go back over these notes. I did speak with someone relatively close to the company, and the word that stands out in the interview is imminent. In the conversation, imminent. That's the word, the imminently. That's the word that stands out. And that, I think, was in August. So I did, contrary to your ill-informed implications, I've stayed on top of this every which way I can. It's just that Corey, I believe, kept, as he should, by the way, kept the material information to himself, or to a very limited people. So you have the advantage of looking backwards. So you don't have to see your pool of diarrhea, but you can look backwards and see that I was wrong. But right now, today, I would tell people they should be buying. I am saying they should be buying the stock. And I do think that I'm about to show you something that confirms my thoughts, but I do think we're going to be under this heaviness, perhaps another 2 weeks. But I also think people are at vacation right now, and they could be coming back on Monday. It can change on a dime. And this chart, it can still keep going down, but as long as it's inside, if I'm into, charts are charts, they're just slightly better than astrology. But if it stays within this as it goes down, once it breaks out, it's going to snap back and it'll be up here. And so I still believe that people should buy now, because they may not get a chance to buy it again at this price. But next week, next Friday, you're going to come on and you're going to go, well, why didn't you get inside information before and then share it to the public at violating securities rules and violating any confidence that the company had in you? And then you're compelling your investors to act on material inside information that's illegal. Why didn't you just wash your hands after you clean up your mess? Watch Richardson. Microsoft is expected to go up another 185 this year. Oh my God. So when they're 5 trillion, Ward, this is how I think, they could issue 1% of their stock and pay 50 billion for Railtown. Dark diarrhea. By the way, you called the 24-cent guy slimy. I'm not sure I did, but I remember using the word slimy in some slinky, I don't know, or whatever. He was right. Of course he's right on the price drop. He just comes to brag like you do. He's here to brag. His life is so unfulfilled and so boring because the computers do all the work. And he goes out at night, goes home to his wife. What'd you do today? Same shit, just selling stock. Well, what's your new idea? I don't have any new ideas. What do you think of? Why don't we go get some oysters? Why don't we go out? Can you do something about the kid? You know, his life is so unfulfilled. The only thing he comes here to do is to brag because he knows what they're doing. And when it doesn't help, when they have a warning from the company, which by now, I'm just going to show you by now, if these guys, if they actually read anything, they'd have it anyway. But dude, you're such, you're an arse. He knows, and you know, and it's your whole business model. Whether you're part of it or you're just one of the little minnows swimming alongside the shark, you know. He knew. He knows they're going to the heaviness is going to drive it down. And they had a heads up because they had access, in my judgment, via an individual's conversation with the CEO, that, hey, nothing to worry about until the end of the year, and probably not until, February or March. Well, keep us updated. Good work. We'll transfer the 7,500 to you. I'm not impressed with his call, by the way. When a stock's 25 cents, even 28 cents, I thought 27 cents, he's predicting 24. And according to my screen, it still isn't 24. So if he's trying to buy it, he hasn't bought it yet. But he's not. He's not trying to buy it. He's just trying, just like you are, trying to cause fear, uncertainty, and doubt. Julie Kim added 3,000. Wow. Again. That is awesome. I liked what you said, Ward, by the way, that Microsoft is going to go up. I guess that means it's going to go to 600. Whew. Whew. Julius, let's go to Vegas when we win. I'd rather go to Monte Carlo or the Cameron Highlands and just go sit in the cabin. But Monte Carlo, I think, would be fun. Las Vegas, too many, ugh. Unknown stuntman. One of my coworkers said Morgan Stanley. Sell all of their silver assets by February. Strange. Well, I want to get, because it's already 1:30, but Steve, the layup trade in silver was from, I mean, it was as low as $16 and up to, I think, 31 or 2, but basically $25 to breaking out of 50. So I personally think it still could go as high as say 120 as it goes up. But the layup was to get in. It was basically the 2.5, 3 times your money. That was the layup. And it, even with that layup, it had some back and forthing. So it created complacency. But what they have to do now is they have to ride it out until new silver supply comes into the market. And there's only 2 ways new supply comes into the market. One is much higher prices, people sell their teeth, or and you know, people mining for tin might have some silver, they'll add it to, they don't throw it away, they'll process it. Or gold miners used to just throw it out in a slag heap. They'll instead separate the silver. Higher prices change supply. But the other source of silver is going to be mining. And most mining projects take, I mean, they can take 10 to 15 to 20 years. You've got to kind of prove it a little bit. You've got to build all the infrastructure, and you've got to get the permits, and that's difficult. All of it. So unless you're in the third world, Mexico has a lot of gold and silver that might, but then you got to deal with the drug cartels. Peru and parts of South, those mountains there, the Andes, it's there. But even with permitting and not having to worry about guerrilla warfare, getting a mine funded, proved, up and running can take 1-2 decades. And with silver, there no longer is a huge above ground stockpile of silver. There is some silver in the warehouses, whether it's New York, Chicago, or London, but they move it around. They don't really want anyone to see it. It's not enough. I haven't read anything recently, but if I had to guess, I bet the silver that they're moving around to meet delivery is under 400 million ounces. It might be as low as 200 million ounces. Annual production, as I recall, is 800 million ounces. I don't know where demand is. I've shown you those charts. There's a shortfall for the last 5 years. Demand is higher than production, but this stockpile and trading has managed to keep it. I don't know if the word is stable, because it's tripled, but relatively stable. but it's all silver, like oil, like Railtown, is priced on the last trade. The entire complex is priced on the margin. Silver is priced by 24 cowboys. JP Morgan, they're mostly in London. The rest are the strongest cohort left is in New York. But they trade paper silver. And they do this on behalf of the financial system, because if it gets out of control, more than one bank is probably going down. The Fed is in on it. The government is, they're all in on it. But you know what is about silver? Silver has real applications. Gold doesn't particularly, but silver does. And it's being consumed. And when it's consumed, it's thrown away in landfills. When it's in your cell phone, or it's in your medicine, or in your bandages, it's all thrown away. When it's in the tip of a cruise missile, it's blown up. There is no spigot to turn on to increase the amount of available silver. There's two things they can do, which you've experienced. You've experienced in every single one of these stocks. It's the same gamemanship. And one of them is fear. They can, like Morgan Stanley may, I don't know what your sentence means. I'll see if I can find the research. But I don't think you're implying that your coworker is in with the paper traders of silver. So it's probably a research report, or it's an instinct. But I believe silver is very volatile. And like right now, there was one thing I wanted to do was to pair silver with an investment in a private placement. Basically private. So such that the move, which I just a layup, was coming, would double or triple the money put in that investment, such that you could sell part of it and the investments for free. Well, that investment never happened. And it still makes sense to make that investment. If I were to match that up now, I would have to tell the investor, only if you can deal with the volatility. Because silver could double from here, but it also could crash at any time, because those same cowboys are going to do the same thing others do in these stocks. They're going to drive it down through stop limit orders. They're going to try to scare people. And someone who pays $80, once it's 50, might sell. That's a source of silver. They created ETFs for silver, and they rehypothecate it. They've done it to every asset on the planet except individual houses. But the amount of silver that's in ETFs and in people's portfolios, it's the same story you're learning here. It's the same one. So one way they can get people to sell silver so they can have silver to meet their obligations is fear. And they have the ability, they have the computers, they're always testing. When the demand kind of crests, they'll sell, and then they get an air pocket down. And it's the same thing that's happening in these stocks over and over again. But silver is worth, I mean, if you want to just take a historic number, the exchequer of the Kingdom of the UK, when the pound reigned supreme, it's called the pound sterling after all. They exchanged silver at 15.5 ounces to 1 ounce of gold. 15.5. That was the fixed ratio. So if you take gold right now at 4,500 and you divide it by 15.5, silver should be 290 right now on that ratio. It isn't. Why isn't it? It's suppressed. You've got to get out of your head that the stock price tells you anything. Unless you're a day trader or swing effing trader. Whatever a effing swing effing bloody seabird albatross trader means. I can never find things. All right, let me just go page by page. Okay, here. Silver was definitely in a bubble in 1980. You weren't even born. But I believe that because of the coming economic storm, both gold and silver are destined for bubbles far greater than the one in 1980. The high in 1980 was 52.5. Everything, 1980 silver went to $52.50. Everything else in the world since 1980 has been in the middle of appreciation and then what many call the everything bubble. It's hard to call a top in a bubble. As long as everybody's confident, it's going to continue. Bubbles pop when people panic. They notice the emperor's wearing no clothes. So since 1980, and this is what year? This is 3 years ago, 4 years ago. Since 1980, the consumer price index is up. So if you priced if you priced that 52.50 high of silver in 1980, if you made it equivalent today for the movement in the consumer price index, that 1980 high in silver would be equivalent to $200. If you took the median home price at the time, 1980, and measured it to 2022, but then applied that increase to the $52.50 high in silver in 1980, silver would be $468 today. Well, 3 years ago. If you did the same with the Wilshire 500 stock index, in other words, take the Wilshire from 1980 till 2022, that rate of change, and applied it to the $52.50 price of silver in 1980, the year that Ronald Reagan was elected president. That would be equivalent to a silver price today of $2,178 per ounce. If you did the same things with the 10-year Treasury bond over that time, silver would be priced at $1,059 an ounce. If you did the same thing with the US GDP over the last essentially 50 years, silver would be priced at $468. If you did it based on a measurement of currency in circulation, if silver participated in the everything bubble to the extent of the currency in circulation, it would be trading for $971 an ounce today. If you did that same calculation off of money supply, the measure M2, it would be $781 an ounce today. If you did it off of a money supply measure MZM, which I'm not that familiar with, but it's money market funds. Anyway, they've stopped reporting it. But if you did it off of that measure, it would be $1,250 an ounce today, well, in 2022. The average of those examples, silver should today be trading over $921 an ounce. So in a way, adjusting the nominal price of silver had not gone higher than $52.50 in 50 years. Everything else is at all-time highs, except straight white males' rights. Everything else is at all-time highs, except for silver. And until just a couple of months ago, 3 months ago, 4 months ago, silver had never gone above it was the only asset that had not even gone above its nominal high. When you adjust it for inflation, and it's hard to do, this guy did it, comes up with $900 an ounce. So these people who have shorted it, and there's massive rehypothecation, and there's massive amounts of paper, silver out in the Western market. Silver and gold more visibly, but gold and silver have been moving east. They've been moving as trade moves and wealth moves to China, to Iran, who's outside of these idiots like Victoria Nuland, who use the dollar system, banking system as a weapon, it became self-fulfilling. And so currencies that used to just be able to trade with the dollar and everyone used the dollar, they're trying to set something else. They need to back it. China is accumulating gold and silver, physical gold and physical silver. They've been doing it for 2 decades. They encourage their citizens to buy gold and silver. Gold's gotten expensive. So now silver, they're buying silver. In India, people buy gold, they buy silver. And guess what? In Russia, they're diversifying their currency reserves at their central bank into gold. And last year they announced silver. So physical silver is moving from the the 3-card Monte of the LBMA and the CBOE. As soon as they grab, so it's moving to the vaults of China, Saudi Arabia, and the citizens, India. And so these cowboys have fewer real ounces of silver to hypothecate and rehypothecate. Meanwhile, the geniuses in our educational system determined, and the Democratic Party determined, that the world was not going to need resources or oil and all that, that somehow things, it just magically comes. So financial system has underinvested in natural resources. We're nowhere near ready to supply the demand of silver that's going to even be needed for AI. We're not ready. But when you talk to investors when it was 25, not so sure. It's a small market. Well, because for the last 10 or 15 years, that small market has been manipulated. They got it up to 52.5, and they drove it all the way back down to 16. It took them a few years, just like they did with GMC and AME. It's the same. It's over and over and over again. It gets so boring. I don't know why we're so thick we can't see it. But that's what's happening with silver. And I believe silver now, if I were to have that same investor invest in that deal and match it with silver, I'd have to say, you've got to understand, $80 silver could go down to $40 at any time. My opinion is $80 silver will back and fill and go over 100, and then it'll go to 120, maybe 150. But silver is always susceptible to what the same heaviness. It's just a bunch of cocksure cowboys. They make a lot of money. So I think you're right. It's possible in February or sooner, they will do a bear raid on silver. And then that'll shake silver out of people's accounts, and that will fill their warehouses in London and I guess in Chicago, New York, with silver, with physical silver. They want to shake your tree. That's one way to start. There won't be enough to solve the problem, but that's one way. The other way is, by nature, if silver prices go to these high levels, people will start selling their knives and forks and knocking their mother-in-law over the head to steal her jewelry. It'll come into the system, but we got a real problem ahead. We've underinvested in oil and gas, underinvested in materials, underinvested in everything, while the world became a financial Bitcoin this and all that. So but anyway, your friend might be right. Silver's going to be volatile. I would say, though, to that same fictional investor, if you put the money up in the private deal and you buy silver and it goes down to 40, maybe just set aside some money so if it does go down to 40, you can add more. Because I do think silver, I see targets out there of $500 an ounce. Silver is going to go, in my judgment, to the equivalent 1-for-1 ratio with gold. But it almost certainly is going to go to 16 to 1, 15.5 to 1. That's the estimated amount of silver in the ground in nature as compared to gold in nature. That's how they come up with that. I think silver ultimately there will be a frenzy, a panic. I think there will be a time where silver could go 1-for-1 or better to gold. But right now, it's had a short run. It's volatile. David Morgan, I saw last month, cautioning that silver has peaked. And I'll tell you what, he is as good as anybody in that measurement. But I think that's a short run measurement. But see, we all get it confused. This dark diarrhea comes on here, and he's comparing, saying that that snake with the red eyes that said, I forgot his name, antisocial something gator, said it's going to go holding out for 24 cents. That's just short-term glory. It's meaningless. But they try to get you to measure my performance with their cowboy hot trading daytime in and out. And that's not why you should be in Railtown. And I don't think you should be in silver for that reason either. However, Steve, I think it's not wrong in silver to either get out here playing a pullback, or if you get out here, you have to know it could go to 100, could go to 125, maybe 150, and you're going to be going, ah. So you could get out a little bit on that way up, or just hold it. And when it pulls back, buy more. And I think you might be in a unique situation where that timing of when Railtown gets up, it might be that you can make that swap. But I think silver, I'm kind of processing after listening to Dr. Sue and NVIDIA. I'm kind of processing, what if everyone agrees that the emperor has no clothes? or sorry, that the emperor is wearing a lovely gown. How much longer could this market go on? How many more months or years, or how much higher? Maybe it's not going to crash this year. Maybe the economy is not going to make it crash. But I'm not ready. I don't want to project that yet. But just to finish the thought, Steve, somewhere between here, well, personally, I think silver's going, what did I tell everybody? To 120. It'll back and fill, go up and down, but it'll go to one. Yeah, I wrote 120, but maybe to 150 now that it's in the headlines. But I think it'll go to 120 later this year as the stock market goes to maybe 70,000. And then it's possible that we end the 44-year-old bull market and it comes down, it corrects 90%. In that case, silver, my opinion, silver would come back to 50, but others say it could go all the way back under 30. That'll be the last time to really build a position in silver if you want to, where it's just a slam dunk. And I think silver from those kind of low points, then you have a multi-year run to, my opinion, 1-for-1 equivalency for gold. It won't last once it gets there. It won't stay there. It's all cyclical. But I think that's what's ahead for silver. I think silver is going to be on the tip of everybody's tongue. And anyway, but it's going to be volatile. So your friend may be onto something. Michael Niche. I think you should go to the SEC. Do your thing. Ignore him. If he acknowledges you, acknowledge him back. Otherwise, ignore him. Okay. It's not bad advice. Clairvoyance, my S. So whose fault? Whose fault for what? It's down less than 1% today. What? You're not used to stocks going up and down? Ugh. No, it's you who needs to get out of your head out of the ass of the guy who knighted you. Thanks for stopping by. Really appreciate it. Bob McKinley. I'm hearing from my source that there will be dilution of sorts with Railtown in March. Private placement. Heard they will run out of funds as they have no incoming revenue. You're an asshole. You're an asshole. You are an asshole. You guys are really in trouble. Everything is in tatters. Gosh, the sourpuss look you have now. What's with that? What did you do today? All right, so this guy's gone. Get that out of there. And I'll give Bob McKinley a little bit more time because he might be legit. I don't know. But diarrhea is gone. Not going to even respond to that one. So I deleted 3. I was born in 78. The guy I'm talking about is the smartest guy at work, single, early 50s, got more money than Davy Crockett. I tell him every day to buy a Monster Bock. I love silver. Well, no, I'm not. Look, I'm frustrated because I emphasized Railtown in June, and I really thought, based on information and opinion and you know, I thought there was going to, but it's you know, nothing lines up perfectly. So I thought there was a chance that Railtown was going to have not only a great move, but I thought some other things might be happening such that I could then focus on silver. It just hasn't happened. Meantime, silver has, I don't think it's tripled from June. I think it's doubled, basically doubled. And Railtown has been under complete assault for 6 months. It's had a couple run-ups and it's pulled back. So I get exceedingly bored of the story. I'm gonna show you something while I drank too much coffee and too much water. So let me just show you something while I take a break. Here, you can watch this. No, that'll bore you. I don't know. I might not be able to find something. All right, I'll play that.
CES is usually treated as a consumer electronics spectacle, but every so often it becomes something more than that. It becomes the coordination event for the next industrial cycle. And that is what is happening this year at CES 2026. It's landing at the exact moment when OEM budgets, data center build plans, and partner roadmaps are all getting locked together for the year, and everybody knows this is a year for scale. So it's where companies are not just showing gadgets this year, they're trying to signal what the supply chain should be optimized for in order to enable that scale. And it's clear from the first few days of CES that the supply chain is now being optimized for exactly one thing: always on AI, delivered cheaply and reliably at scale. NVIDIA's own framing is unusually explicit about this. They say AI has entered an industrial phase. If it's industrial, you think power, you think scale, you think electricity, you think big machines, and that is exactly the right mental model for CES this week. The announcements that matter most are really not about new devices. They're the pieces of an AI factory: compute, memory, networking, security, power, deployment velocity, because that's what determines who gets to ship intelligence at scale. So CES is where that industrial posture is becoming visible in product form. Let's go through what a few of those look like. First, we are going through a demand shock right now. I know it has become popular to ask questions about the AI bubble, but we have got to admit, looking at CES, that everyone who sees daily data on AI is acting like they are way behind on demand, not way overhung on demand. Inference is now the cost center that sets the architecture of the future, because inference is how we serve the models at scale, and we are short on demand. The foundational fact that everybody is working on is massive usage. So when Sam Altman says ChatGPT hit 800 million weekly active users back in October, it's more now, we are under a permanent serving load that dwarfs the cost of any single training run for AI. And that really flips the industry's optimization target, right? Training can still matter strategically because it creates new capabilities and because any individual training run is quite sizable. But inference is dominating the operational reality of chipsets. It's continuous, it is latency bound, it's ruthlessly cost sensitive. And so the system question is becoming, how do you drive dollars per token down while keeping latency and reliability inside SLAs? That's the core plot line you need to be following behind the chipmaker moves that we're tracking in CES. And so CES 2026's real headline is that NVIDIA is now selling an AI factory, not just GPU generation. And so the most important story is not the launch of Rubin per se, or that Rubin exists, that's the new NVIDIA chipset. It's actually how NVIDIA is positioning their new chipsets within the larger AI ecosystem. Rubin is a rack scale platform. It's not just an individual chip, and it's designed around token economics first because it's intended to be serving inference loads. So NVIDIA launched the Rubin platform at CES as a 6-chip, extremely designed system with the Vera CPU, the Rubin GPU, NVLink 6 switch, ConnectX-9, Super NIC. I can say other things and you probably believe me because you just say acronyms. But take my word for it. Essentially, NVIDIA launched a rack scale chipset that slashes inference token generation cost by a factor of 10 while serving inference loads much, much more quickly. And so what they are optimizing for is extremely efficient service of very large models and very large context windows. The Rubin chip is going to be able to handle 10 million token context windows. The Rubin chipset is going to be able to handle serving models like 5.2 Pro much, much faster than we can serve them today. And how do we know this? Because NVIDIA productized inference context memory with the Rubin chipset. So the most inference era move is NVIDIA's inference context memory storage platform. It's an attempt to push the key value cache and context out of the GPU itself and into a storage tier so you can reuse it instead of recomputing against it all the time. And NVIDIA's developer write-up frames this directly as KV cache growth becoming a scaling constraint as you serve larger and larger context windows. And for those who don't know, KV cache is something that you have to compute against when you are serving next token generation because the KV cache absorbs the tokens that you have been given as part of the context window. This is a big conceptual shift. Context has become a managed resource at this point, just like a cache or a database tier is managed in the classic web stack. So when the platform vendor makes that a product, it's basically an admission that inference scaling is now a memory and data movement problem as much as a compute problem. And we see that in the way they've designed the rack scale chipset. The NVLink 6 switch, the ConnectX-9, those aren't just random acronyms. It turns out those are part of the firmware and hardware advantage NVIDIA brings to the table because they're designed to provide interconnects and data throughput that allows the entire rack scale chipset to work and serve data at scale, and really to work and serve much larger context loads at scale. If you want the most complete end-to-end story of what it's going to look like to have Rubin out in the wild, treat OpenAI as a reference customer for the AI factory era. The 2025 infrastructure deals that OpenAI wrote describe the entire stack and have implications today. Compute supply is being industrialized in parallel, and OpenAI is leading the way on. So NVIDIA, we were just talking about them, OpenAI and NVIDIA announced a letter of intent to deploy at least 10 gigawatts of NVIDIA systems. The first gigawatt is planned for the second half of 2026 on those Vera Rubin chips, with NVIDIA intending to invest up to $100 billion progressively as deployment scale. Notice it's framed in power. Notice that it's 10 gigawatts. Like, we are now thinking in terms of dollars per token at the headline level. This is industrial AI. Lane 2, in parallel, they are not done with just an NVIDIA partnership. OpenAI and AMD announced a partnership for another 6 gigawatts of AMD deployment. And AMD obviously issued OpenAI a warrant for 160 million shares tied to deployment milestones. And they're also looking to bring the first gigawatt online in the second half of this year in 2026. Again, they're measuring in power. It's smaller than NVIDIA. It underscores how much demand OpenAI sees up ahead for their models. They can't get enough out of NVIDIA, even though NVIDIA is the premier provider. And we're still not done because OpenAI and Broadcom announced a collaboration to deploy another 10 gigawatts of OpenAI-designed AI accelerators and rack systems. And that's targeted to start in the second half of 2026 and be complete by the end of 2029. And so OpenAI is not necessarily choosing a chip here. It's essentially saying, we are so big and demand is so high, we are building a portfolio of supply because the constraint is not theoretical compute. The constraint is delivered compute to our users at scale. Sam Altman has been very open about the fact that he cannot find trillion token-sized packages to deliver to enterprises, and he needs them. And he's going to need 10 trillion. He's going to need 100 trillion token packages to deliver to enterprises because individual developers in 2025, last year, were doing 10 billion tokens at times. And so if one developer can do 10 billion, it adds up into the trillions awfully fast. But we're still not done with the OpenAI as a factory story. Capacity is also being bought as cloud contracts. So OpenAI's $38 billion AWS deal is best read as a capacity lock, while longer-term AI factories are gradually coming online. They're securing the cloud now so they can continue to serve while they build out this larger agreement to scale NVIDIA GPU capacity, to scale AMD, et cetera. And we're still not done because they also carved out a multi-billion-dollar deal with CoreWeave to build AI capacity that CoreWeave can help them serve for inference as well. Fundamentally, when we talk about the AI factory future, everyone else is talking about this after OpenAI wrote the deals to secure their own future for the next few years. That was a really smart move on OpenAI's part. It's going to guarantee them a place at the table for 2026 and 2027, no matter what happens. And it will give them room to keep growing, scaling, and serving their models with fewer bottlenecks than players who came late to the table. Now, this is the piece that most people tend to miss. OpenAI also announced that Samsung and SK Hynix are joining the Stargate project with a target of 900,000 DRAM wafers per month, which is critical to enabling the memory that drives OpenAI's model. NVIDIA's CES move essentially formalizes inference context memory storage, and it's part of a platform-level mirror to what OpenAI is doing by securing the SK Hynix contract. And so what I want you to understand is that when you look at the headlines, like what NVIDIA announced with the Vera Rubin chipset, what you should see is a simplified, packaged up picture of the AI factory of the future. And we can see all the pieces of that factory coming together in individual deals that OpenAI put together over the last year. The thing is, everyone else is going to need NVIDIA's chipsets because the broader market is already reflecting the scarcity created by OpenAI's deals. Reuters is reporting that DRAM prices are now up over 300% in Q4 as AI demand has tightened conventional supplies. Reuters also cites Counterpoint, which calls out that in the third quarter of 2025, bandwidth memory share was incredibly dominated by just two players, Samsung and SK Hynix, the very players OpenAI cut a deal with. The HBM race is, like so much of the rest of the AI race, turning into a bottlenecked competition for the supplies of just a few vendors. You see this with Zeiss, you see this with NVIDIA and their GPUs, with SK Hynix, with ASML. Fundamentally, there are broader shortages across the AI economy because we are so demand constrained. There is no shortage of AI demand. And again, I'm going to call out, that is not what typical bubbles look like. I was there in 2000, and the problem was not that we had too much traffic on the internet at that time. But that's the problem now. So, of course, the question to ask after the Vera Rubin launch is, are there signs that anyone is really threatening NVIDIA's dominance? If threat means NVIDIA gets displaced as the default platform in the next year to 18 months, the overwhelming evidence says no. OpenAI's own 10 gigawatt NVIDIA commitment is a great example. But I also want to call out that if threat means NVIDIA's share of inference spend might decline over time, then potentially yes. And the mechanism is really structural and demand driven. There are three real pressures on NVIDIA right now. First, second source hyperscale GPUs like AMD. So Google's AMD deal is precisely the kind of anchor customer commitment that makes a second ecosystem viable at scale. And OpenAI is really doing that because their demand is so great, they need a second partner. This in turn can catalyze the existence of a second alternative ecosystem alongside NVIDIA. This reminds me a lot of how AWS was initially the only game in town for cloud, and over time, as customer needs grew, Microsoft had Azure, we had the Google Cloud Platform start to spin up, and now you have situations where some customers are multi-cloud, some customers are picking one of those individual clouds, but regardless, each individual player in that system, including AWS, has been able to continue to grow, even as their relative share of the total cloud spend has changed over time. The other pressure on NVIDIA is custom accelerators for predictably serving workloads, which is what the Broadcom deal with OpenAI is all about. You don't take on custom silicon, which is what the Broadcom deal does, unless you expect inference volume to be so high that it justifies specialization at the chip level at scale. And so that's a case where essentially OpenAI is saying our demand volume is so large, we need specialized chips. We can't do it any other way. And finally, hyperscalers are exporting their in-house chips. So Anthropic's TPU expansion from Google is a really clean signal that large labs will train and serve on non-NVIDIA silicon when the price for performance and the availability are compelling enough. And the prediction is that Anthropic will have over 1 gigawatt of TPU capacity online in 2026. I still do not expect Google to let too many TPUs out of the house because the TPU advantage in the house for Gemini is so compelling as a competitive advantage. That being said, Google's an investor in Anthropic. It's definitely to their advantage to invest in Anthropic's models and quality, and I think it makes sense for them to put the TPUs there. And so I think we're looking at a future that it's a mini winner's reality, right? And this is the nuance that a lot of summaries miss. Demand is so high that NVIDIA will remain the biggest absolute winner. And I still see meaningful scale for second players in the industry because demand is exploding so fast. And so competition looks less like dethronement from another player in this case, and more like a multi-ecosystem coexistence, a multi-cloud environment, if you will, especially in inference, where heterogeneity is very operationally tolerable and cost pressure is extreme. You can train on the same chipsets, and it's much, much more preferable to ensure a clean training run. But inference is a little bit looser and more flexible, and you can serve models from multiple different chipsets if you configure them. Now, CES always has some fun stuff that comes with it, and ironically, that's part of the same industrial story writ large. And so CES is making this larger shift legible because it shows that AI is escaping the data center and appearing as physical AI, as ambient intelligence. And that's going to continue to increase inference demand and diversify where AI is running. The story continues to be demand is running ahead of compute. In fact, NVIDIA's CES presentation explicitly linked Rubin to open models for robotics and for autonomous operations and showcased AI-defined driving in the Mercedes CLA demo as part of a broader platform story of where AI is going to show up. And this matters because physical AI is very latency bound, it's very reliability bound, and increases the value of inference optimization, which is exactly where Rubin is aiming. And really the larger story I'm telling here is what OpenAI is doing as well. Consumer-facing embodiments like the Lego Smart Brick are probably how the public notices some of this shift, but the real driver I hope you're getting is industrial infrastructure. It's AI becoming a fully fledged industry, perhaps the most valuable and largest industry on it. So summing it all up, CES 2026 is the moment the industry stopped pretending that we were in a chip race and started acting like we were in a factory race, where inference economics, memory supply, and power constraints are actually determining who gets to ship intelligence. And I took time to tell the OpenAI story because I think it fits right in here. OpenAI wrote the contracts in late 2025 that enable them to be competitive in this factory race. They saw it. And NVIDIA has responded by selling Rubin as a rack-scale AI factory and productizing the context management systems, the KV cache management systems that enable inference with less constraints on context management and data movement. So compute is no longer your only constraint. You also have to think at rack scale. How is memory being managed at the rack scale? How is data moving at the rack scale at a pace that allows us to serve inference loads for high quality models in real time? And that's where all the deals on memory fit in, right? All the DRAM deals, the conversations with SK Hynix, the focus on making sure that we can accelerate custom chipsets with Broadcom and OpenAI. Those are all deals that enable a sophisticated serving of context windows in inference compute at runtime, as I ask for it. And so If you want to think about what is the world that's being enabled here, it's a world of ambient AI everywhere. It's a world of very sophisticated AI everywhere. So we're talking about the Mercedes CLA. We're talking about autonomous robots in the factory. We're also talking about GPT 5.2 Pro quality models being served almost instantly because tools like Vera Rubin are enabling extremely rapid inference at token efficient unit economic prices. And so when you look at that story overall, it is a story that is too big for any one company. I know that OpenAI has carved these deals out and has secured a place for the future, but you can see through the TPU deals that Anthropic has rung out, and you can see through NVIDIA's move that there are many winners here. And NVIDIA is unquestionably showing through the Vera Rubin chipset that they are going to remain the biggest player in the chipset conversation for AI for the foreseeable future. And inference is so big that they will not be the only game in town. And OpenAI, through the deals they've built, have ensured that there will be a multi-winner hardware landscape where second sources and custom silicon can take on meaningful share without anyone really losing. The pie is going to keep growing so rapidly, everyone is going to get more and more business. And so this was the year that AI became a factory. And that is going to enable a layer of industrial scale for AI applications that is going to change the way all of us work. Instead of AI being locked away in the specialized corner of our computers in the chat window, AI is going to be on every single surface of our digital experience and also moving very rapidly into robotics. And to do that, you have to have the factory scale, and that's what we're seeing at CES this year. This is the future getting unlocked right now. So let me know what you think is the most important.
Your mama is the most important. Let's see. All right, I'm gonna. Most of that seems like bashing, so. So I'm gonna just take him off. All right, I want to show you guys something today. Took a while to get through all that, which is my fault, of course. Never can quite figure out which is the part to show. All right, I think it's here. No? Yeah, I guess I can always come back to it if it's wrong. Okay, so today, actually probably last night, Railtown filed this. This is their monthly progress report. Railtown AI Technologies. Number of shares outstanding, 194,386,776 shares. The key thing here is this whole criminal enterprise counts on that number being expanded by the company. Then they'll bring in a banker like Canaccord, who will do a toxic financing, which will really magnify the amount of shares out there. And then they can hypothecate and rehypothecate shares. And already right now, there's probably up to 50 million shares shorted in the United States. We don't know the Canadian numbers, but we also don't know the crossing back and forth. But theoretically, there's quite a bit of extra supply in the market in the tens of millions of shares. That's what they try to do. And as they drive that down, they want this to become 1 billion shares or 2 billion shares, like it did with DBMM and MMAT. And then companies like Vocal, if you did the reverse arithmetic, are probably in 3 or 4 or 5 billion share land, but they did a 500 for 1 reverse split. So that's what they do when they brag about, and they come on here. I don't know. If you want to be a day trader, listen to them. I'm not a day trader. So this was as of December 5th, but it was filed last night. The monthly progress report has to be out there before the opening of trading on the 5th day of every month, and blah, blah. And there's the instructions. So they report on the business. Number 1, provide a general overview and discussion of the development of Railtown's business and operations over the previous month, over the previous 30 days. So let's see what they say they've done for 30 days. During the month of December, Railtown's team continued to add functionality to the platform by adding / developing features and revamping marketing efforts. Currently, over 1,200 companies and users on the platform. That's up from under 900, and I think even around 600 from 2 years ago. I showed that to you before. I'm not going to go find it again, but this is growing. This number of users are growing, but not rapidly. I think what you're going to see is TELUS is going to make that 1,201. I don't know if we're going to get a breakdown of how many users on the data center should be added to this. I don't know. We'll find that out. But they're not ignoring this, but obviously they're focused on TELUS. That's the Grand Slam Marino. All right, platform. So they're talking about what they've done for the last 30 days. Platform finished the SOC 2 audit. This is for year 2. And received the SOC 2 report finalized for the 2nd year. Working on Rail Engine version 1. Expected, look at this right here. Expected to be finished by the end of January. Does that give you a, this isn't information that if I'd called into Corey, spelled with an I, that idiot guy that wrote that, that he'd give. But look at this. Here it is filed. So if it's untruthful, after a short back and forth in court, they can go to jail. Longs go to jail. Shorts walk free. Working on Rail Engine V1 version 1, expected to be finished by the end of January. So what could that mean? I'll tell you what it probably doesn't mean. It probably doesn't mean that the data center is going to open for business in January. Probably. So I don't know how much of this the shorts were able to glean, but now they know. I think they did already know. In the company, I think ill-advisedly had an hour-and-a-half conversation with a direct channel to the shorts, in my judgment. But I could be wrong, I suppose. I don't think so. But I'm not an attorney. I can make suppositions without things being entered into evidence. I can actually put 2 and 3 together. So this confirms maybe that maybe, just extrapolating, that it'll be a February launch of that data center. Soonest. That'll be the soonest. All right, they worked on universal retrieval and ingestion engine for RAG applications. They connected external data to LLMs, their platform. Their platform can connect external data to large language models, no matter the source of that model, using Railtown's universal retrieval engine for LLMs. And it allows the user or the language model to access, I guess, the user or the external platform to access unstructured data from any source. It's a pretty big thing. Build RAG applications on your user data. Railtown's universal retrieval engine has pre-built connectors. That's kind of like LangChain. Pre-built connectors to ingest unstructured data from any source. So the reason it sounds similar is LangChain sets up these little chains that are pre-built. That's the only connection. I don't know if it does the same thing. Railtown's ingestion pipeline allows devs to send data by event or in batch format, and allows the team to run multiple cleaning and transformation steps to the data before it is saved in a unified database structure that will allow the team to interact and create RAG applications / automation on top of the data. So that's the progress they made on their platform. Integration. They finished the Azure DevOps one-click integration. Do you see that? They finished Azure DevOps one-click integration with multiple board support. And it's Azure, so that's Microsoft, as you know. And then as it relates to AI, what progress did they have over the last 30 days, Railtown? Railtown is working on the next set of features and feedback. Terrific. Working on evaluation and testing support. Terrific. And there's for Ward, adding support for Rail Engine in Rail Tracks. And then adding samples and code samples to make it easier to get started with framework. Sounds pretty good. All right, the next question to answer. Provide a general overview and discussion of activities of management. I'm sure they mean as it relates to the company. Management continued to exercise oversight over technical work and corporate matters. So that just, and then there's, if I can skip those, there's roughly 6 questions there that the answer is not applicable. And then there is more to that list of non-applicable. And again, you can see this is January's progress report. Now, this guy that came on said they don't have any cash is wrong. Now, this is a small amount. So for December, they only brought in 56. I want to write that down. We'll see if we can check that. Issued, number issued. $239,872. Okay. So anyway, they raised $56,000 US, which in Canada, that's a lot of money. People in Canada can buy, you know, they can take care of entire families for that much. No, I'm just kidding. But obviously, that's a higher number in Canada. And then there's a bunch of NAs. And then the undersigned certifies, dated January 8th, and it's Paul Woodward. And let me see if there's one more page there. Yeah, I think there was. This one. It's just their details. Okay. Maybe I have to look here. I want to just find out, and I have it, and I don't know that you need to see it. It would probably take too long for me to find it. On here, but maybe I can find it pretty quickly. I want to see, here, maybe that was easier than I thought. Wow. So for the last 30 days, they issued 239,000 shares. And I'm just going from this list, which I've shown you before, from one of their filings, but you know, stick with the tiger. He does his own DD. According to this, they could have issued, let me just add it up, they could have issued, and this is not audited. I'm just going from this data that's here. On the other hand, it could be wrong, or my arithmetic could be wrong. And what's the, wow, that would have been amazing. I think it's mainly because the price of the stock, it was cheaper to buy the stock in the open market. That's another impact of the destruction of the heaviness, is it destroys the company's ability to use standard liquidity opportunities. For example, they could have issued 3,400,000 shares at 60 cents Canadian. But of course, the heaviness drives it down, so those didn't get issued. And then they could have issued another 500,000 at 35 cents. And my guess is perhaps some of that got done. And then in the United States, they could have issued 2,600,000 at 24 cents. I think those probably weren't done because it's just not worth the effort. I've just gone through such a hard time with myself, and it's not over, trying to get a legend removed. So conceptually, they could have issued, if the stock price had been higher, wow, 6,556,852 shares. And it looks like they only issued 239,872. So I bet the next time we see that number for outstanding shares, it's reduced by 6 million shares, assuming they don't issue anymore. So it was non-dilutive, very non-dilutive, very non-dilutive. 6 million share reduction in the fully diluted number, 6,300,000, is on 222 million. I don't know. Is it 2%? 3%? Non-dilutive, non-dilutive. Everybody tries to get you thinking, oh my gosh, oh my gosh. All right. Let's look at the price. It's almost 3 o'clock. I don't know why my All right, it's 24.31, 24.31 to 24.99. Are you out of your mind? Mashugana is down 20 cents to 78.99. Doesn't mean it's not going to work, I suppose. Railtown down half a penny, 24.31. Next trip down 8 cents, 3.45. Finger down a penny at 128. Genius, which I hope drops off soon, is down half a penny basically at 63.71. Taking too long. Okay. Justin Babish, do you mean they had 56,000 in revenue? I don't think it qualifies as revenue. I think it's called I technically I guess it's revenue, but I don't think that's how it's booked. I think it's maybe it is booked as revenue, but it's from the exercise of warrants for a 30-day period. And I just went through it. They could have exercised 6.5 million warrants at roughly I don't know, 3.5-4 million in money's taken in. So that's the negative. They didn't get that. But the price of the stock came underneath the exercise price. So it looks like a good amount of the 35 cents strike price got exercised, but not all of them. So the good thing is, Justin, the outstanding share number has dropped by over 6 million. This is called non-dilutive. This is, in fact, it reduces the dilution by 6 million shares. It's a big deal. It's a big deal. But it would have been nice if they had gotten that cash. They don't need it, though. Justin, I think January, like I just showed you, it's pretty clear from that document that Rail Engine version 1 isn't ready until the end of January. Now, maybe they have a version 0. I don't know. But I think it's safe to say, Justin, that they will not turn on that data center until February. Well, February, let's say February 15th. If they do that, the what's the word, acquisition of clients is the responsibility of the data centers, the responsibility of TELUS. And so as people come on, which I assume it'll be hundreds of thousands of people absorbing the information, and maybe you can presume that the first day 1,000 people, 10,000 people, I don't know, come on to their website TELUS's website and they click, enter, boom, you've got a new, TELUS has a new data center revenue source. And we have to find out what I believe Railtown is going to be the sole orchestration framework layer. But we have to find that out. And it may never be disclosed. And there may be no prevention from another one coming in the future. But you do know this is Canadian sovereign data center. You know that TELUS is Canadian sovereign. You know that, yet to be found out, but you know that Cohere, if they choose Cohere, is Canadian sovereign. And you know that they've already chosen Railtown, but you know that Railtown is Canadian sovereign. So my point is, in February, it could be later. I don't think it's going to be January. I just read that to you. In February, as people, because of TELUS's active, what do you want to call it, efforts, I would say hundreds of thousands of people are going to get in the mail or on their email or on their computer or however else, join us, move your, and I think, I don't know what the fees are. I don't know what the revenue will be. We'll find out. But it can turn on in a day. They can get it done in an hour, half an hour. And so it's going to scale. The key thing is it's going to scale very rapidly. And I would imagine that there would be no revenues in February, but there could be, that come to Railtown just because it's a half month or a partial month. But in March, maybe the February revenues and the March revenues come. I don't know if there's a lag. You earn it in March and maybe there's a lag till payment. Maybe it's paid in April or even in May. And then I'm not an accountant. I don't know if you book your revenues when they're earned or when they're received. I don't know all those things. But all I'm trying to say is in February, you could start seeing revenues just explode upward. So that's one to look. But the answer to your question, it was for the last month. That was a monthly report. In breaking news, the Nationals announced they have claimed right-hander Paxton Schultz off waivers from the Blue Jays. The Jays designated the righty for assignment recently when they signed Kazumo Akamoto. The Nats opened a 40-man roster spot today by releasing Siren Lau. Doesn't that change your life? You got it, Justin. Warden, the data center is up and running. So Ward knows something. Yeah, that's true. We know that. The data center is up and running, but is it, are they, that's interesting. So they could be open. They could bring on customers. They could bring on customers and bring Rail Engine on in 2 weeks. That's a good point, actually. Adding Rail Engine after they already have. That's a good point, Ward. That's a good point. But TELUS says they have, yes, of course. TELUS, the CEO made the projection that he's going to grow AI-enabled revenue from AI-enabled technologies, something like that. It was on the third call conference, and there's a transcript. I've shown it to you. From 800 million to 2 billion. And the only thing that's changing is this data center, and there'll be one behind it. So I presume most of that increased revenue is coming from the data center. And he must know, to make a projection like that, he must know his clients and what's going to, they do marketing studies and all that. All right. I wanted to show you something else. Railtown is down, the last trade 24.31. Fingers in the green by half a penny, 129.5. The volume on Railtown today is 238,000. So again, using high frequency trading, I don't know why that's allowed, using collusion and spoofing and layering and all the illegal things. If they got off, I mean, it doesn't have to be all today. It could have been over the last 2 or 3 days. But just looking at numbers today, if you pick the high of 25.21 and the low of 24.05, and just for my noggin, just say that's a penny. If 238,000 shares, I would assume on the sell side, I don't know, somebody might be blowing it out. Whoever that person is has to be having second thoughts because it didn't drive the stock down. But let's just say they got a penny profit, whether they booked it today, but it's back and forth, hiding, dark pool. It's just all disgusting. And they got a penny on 150,000 shares. It's $1,500. It's better than washing cars. It's better than, mopping floors. That's what it's all about. And then we have to constantly be measured against it. Let's see what Rail Engine, what is Rail Engine? They could get, everybody could get started with rail tracks. I'm sure Railtown would rather have it all ready, but you're right, Ward. They could start with the other two, and then it could say coming soon. You're right. You are right, Ward. That could be. All right, I want to show you this. So maybe, hang on. I think there's one missing. There is one missing. Oh, I see. I've got too many images. Your mama had too many images. All right, let's try again. Didn't take. Darn it. Okay. What does this say? I think I can take that one down. I think I can take that one down. And what's this? We talked about that. Excited another step forward. Canadian AI ecosystem, TELUS AI factory, state-of-the-art AI infrastructure, empowers Railtown AI and its vast community of developers to leverage one of the most powerful and secure AI infrastructures in Canada. This ensures data and compute stay in Canada. Under the visionary leadership of Corey Brandolini, without an I, a Y for Corey instead of I. Railtown AI has demonstrated how Canadian talent is groundbreaking. Looking forward to continuing our collaboration with Railtown AI team and expanding TELUS AI factory offerings to become the full stack solution for agentic AI developers in Canada. Or I'm going to take that one down. It's a pretty good one, though. Here, Justin, right here, look at the December number, 3,392,000. The 9th at 60 cents. So they didn't, the stock was below 60 cents. So it doesn't make sense to exercise them. And then at 35 cents, might be a push for the effort. And then the US priced ones were 2.6 million. Imagine if that had gone up. But that just didn't happen. Now in January, they have some US, but they have, I would guess those may or may not go off. But February, they got a bunch coming in, like right here, 5,890,000 at 30 cents Canadian. So they're I'm going to take that off too. They're going to have revenue, not revenue, they're going to have money's coming in. This was my chart. Yeah, they broke it down under there. I don't know. I don't know if I need that anymore, so I'm going to take that down. All right, so now let's see if I can get this one last piece. Finally. So What is Grok with a Q? What is the Grok NVIDIA deal really about? This is by Sally Ward Foxton, and she wrote it or published it on Wednesday. Oh, I should show you one more thing. For clarity, I should show you this, because she doesn't put it in the headline, but on David Faber did. NVIDIA buying AI chip startup Grok's assets for about $20 billion in its largest deal on record. $20 billion just for, you know, kicks and giggles. Let's see what 20 billion would do to Railtown. So I don't use 222 anymore. I use 216 fully diluted. That would be $92.50 a share. I'm not saying it's going to happen, but it's big numbers that they do. Now, what NVIDIA is making its largest purchase ever, acquiring assets from 9-year-old chip startup Grok, or Grok, for $20 billion. Grok, which was valued at $6.9 billion in a financing round in September, framed the deal as a non-exclusive licensing agreement with the CEO and other leaders joining NVIDIA. So that's actually something that's probably going to happen with Railtown. It's called a lease and hire agreement. I don't know if it'll happen in Canada, but in the United States, they do these lease and hire agreements to get around the regulatory hurdles, which they may pass, but it just takes so long. Everything's in a hurry up mode. So it's like that Windrift deal. They pay big money to hire the talent. It's huge money. And then they license the company, the deal. So they're paying $20 billion. I bet most of it's going to those people coming over. And then they're licensing, and the company continues to exist on licensing revenue. Lease, that's the lease part. And the hire part is you hire the principals and the talent. And somehow that's different than buying the company. That kind of strategy may not happen in Canada. I don't know. Sorry. But if it were to happen here, I think the fact that Corey and Marwan and Dr. Tom Core and the IBM guy and Ruffalo and Norbrega, they all own this stock. I think they'll strike a deal for the stock. And they're all older guys. I'm not quite sure they'd be hired. I don't know what interest Corey would have in being hired. I don't know. But just remember that the strict buyout that we're used to might be a different model. It like that Windrift or whatever it was called. You buy the team, and then the company has a licensing agreement, and they're both huge deals. But anyway, let's go on now that you saw that it's 20 billion. Let's see what they say here. What is the Grok NVIDIA deal really about? When news broke on Christmas Eve that NVIDIA had all but acquired Grok with a Q, two things were immediately clear. First, the announcement had been timed to come after the markets closed earlier that day, in order to give markets time to understand what was going on before reacting. And second, no one without direct knowledge of the deal understood what was going on, what on earth was going on. Over the last 2 weeks, there have been many analysts posting on social media, from the peanut gallery, about supposed reasons that the market leader in the world's most valuable company would want to all but acquire a 10-year-old chip startup with an entirely different hardware and software architecture. Some of these hot takes are just plain wrong. The most popular mistake is misspelling grok as grok. And I guess another one is they use ChatGPT generated quote unquote analysis of the difference between SRAM and DRAM. And a third one, I guess, is how they're saying this. She's saying this implied the deal may have been driven largely by an acqui-hire. Oh, Aquilung. Acqui-hire of Grok's team, especially the CEO, Jonathan Ross. If only the picture were clear. Here is a summary of what we do know and our own take, leaving many questions. There's one missing. Oh, there it is. Grok CEO Jonathan Roth and EE Times Sally Ward Foxton are showing cards. What we do know, the wording of the announcement from both companies said that NVIDIA had a non-exclusive license for Grok's technology and hired key members of Grok's team. In practice, it has become clear that Grok, whatever, has effectively been gutted. What remains is a small team in place to continue running Grok Cloud's infrastructure, headed by Grok's CFO. We assume NVIDIA has licensed all of Grok's technology. We also assume that Grok's hardware infrastructure and its developer community have been retained by Grok Cloud. We saw the same kind of deal done recently when NVIDIA all but acquired networking chip startup Enfabrica. the motive is, we assume, to avoid regulatory scrutiny or antitrust objections. We assume the same reason for Grok. With Fabrica, the rumored deal was 900 million. Well, let's see what 900 million would do for Railtown. $4.16 a share. Grok is a bigger, more established startup, but the rumored all-but acquisition price is an impressive $20 billion, more than 20x what NVIDIA paid for Fabrica. The difference is an order of magnitude. The prevailing, well, let's just read it. The prevailing narrative on Fabrica suggested the all-but acquisition was at least partly an acqui-hire. Fabrica, led by somebody and somebody, certainly had a stellar team of very smart people. Grok CEO Jonathan Ross hires only the best of the best, and he thinks outside the box and outside of the industry. But while Grok was certainly a team of smart people, the $20 billion figure simply does not make sense as a deal driven primarily by an acqui-hire of a few hundred people. So what other reasons could Grok be attractive to NVIDIA? It is not a pivot. Grok was founded in 2016 by a bunch of ex-Googles. They commercialized a first-generation chip, started selling it in 2019. 6 years is centuries in AI years. They pivoted to automotive chips in 2020, but they called it not a pivot. And then to an infrastructure provider in 24, not a pivot. Laterally taking on significant venture capital to build out its own infrastructure. And there's a risk when you take on venture capital. You lose control, but you have obligations. And you give up, sometimes you give exclusivity to that venture capitalist. Effectively becoming, so Grok effectively became a hyperscaler in its own right. This last pivot prompted many to write off Grok as a chip company. All right, I'll skip the rest of that. Nevertheless, Grok has been doing significant deals with, I can barely read that, GCC, maybe it's the Gulf companies lately, to deploy its infrastructure in the region. It has also done sovereign AI deals in other regions, including Norway. With NVIDIA manufactured Grok chips, either first or second generation, here are the clues we know. Jensen Huang reportedly referred to the Grok chips. Quote, "We plan to integrate Grok's low latency processors into the NVIDIA AI factory architecture, extending the platform to serve an even broader range of AI inference and real-time workloads," unquote. However, quote, Grok is very, very different. I'm not expecting anything there to replace what we do with Vera Rubin. So Grok's technology would not become a part of NVIDIA's main data center roadmap, which is why I'm showing you this. Why would they buy it? Why would they buy it? Grok is different, very, very different. And I'm not expecting anything there to replace what we do with Vera Rubin and our next generation. There's no reasonable or good way to do something better than Vera Rubin that we know of. And this doesn't change that. However, we may be able to add their technology to do something incremental. For 20 billion, something incremental? Note his words of might. It sounds like NVIDIA may still be planning what it will do with the Grok. So why'd they buy it? It seems that Grok will not join the main NVIDIA data center roadmap. And then it says, but that the new technology will address some use case that NVIDIA is not already addressing with Vera Rubin, specifically real-time use cases, which I think is what Rail Engine's all about. And that's why my mind goes, maybe NVIDIA'd be interested, but you don't know. I think the reason's different here, why they bought them, than why they would buy NVIDIA, buy Realtime. So here's a few possible outcomes of this. One possibility is that NVIDIA will manufacture and deploy Grok's RAM-based chips as a standalone product for data center inference. Despite Jensen Huang's reference to NVIDIA's AI factory stack, this still seems a little far-fetched, because it would mean NVIDIA admitting that in some cases, GPUs are not the solutions. It would mean destroying years of NVIDIA messaging that GPUs are all you need. So why did they buy it? NVIDIA weakened its own argument slightly when it introduced the Rubin CPX, a prefill specific GPU intended to work alongside other NVIDIA Big Iron. All right, for decode. Grok obviously has a software stack that works, but doesn't work well enough to deploy Grok chips as a product. Skeptics say that could be part of the reason companies like Grok and Cerebus pivoted towards serving tokens for a subset of popular foundational models in the first place. So we would assume that a non-trivial amount of software work would be required to relaunch Grok chip as a NVIDIA chip. So why did they buy it? More realistically, might be a Grok chiplet alongside a big GPU chiplet to handle parts of the workload. But again, software would be a sticking point. Grok's architecture doesn't use kernels. It doesn't use the same thing. So why did they buy it? What does Grok's hardware offer that NVIDIA does not have? Why would NVIDIA pay $20 billion? The answer is not RAM by itself. NVIDIA's GPUs use RAM. Many types of logic chips including most AI whatevers, use SRAM. Grok does not use DRAM because only a DRAM fire can marry a SRAM fire. I don't know. Grok doesn't use DRAM because it can't. It literally does not have a DRAM interface because its chip was designed centuries ago in 2017. DRAM wasn't needed back then. So why did NVIDIA buy it? For $20 billion. The answer may be single user token latency, raw speed. But Cerebus, another SRAM-based architecture, is faster. Even with these benefits, as discussed, the challenges of integrating Grok architecture into NVIDIA's data center hardware and software would seem to be huge. So why would they pay $20 billion? One left field answer may be determinism. Isn't that a form of philosophy? An interesting side effect of Grok's architecture is the one it tried to push on the automotive industry, maybe SoundHound, in 2020. Determinism has a significant implication for applications which require functional safety, including robots. Wong refers to these as real-time applications. Again, this would mean admitting GPUs are not good enough at everything. But this scenario is easier to imagine. Ultimately, NVIDIA is a big company with massive resources and its own team of smart people. If it wanted to make an entirely SRAM-based chip, it could. And if it wanted to make something that is not GPU, it could. And it could do so for a lot less than 20 billion smackers. It could also all but acquired a company like D-Matrix or even Samba Nova for a lot less than 20 billion. Reports suggest Samba Nova's short term sheet for acquisition by Intel is in the 1 to 2 billion range. So what would $1.5 billion do for Railtown? Seven smackers. Okay, so it could be commercial factors. Rather than buy Grok purely for technology or architecture, EE Times suspects there are significant commercial factors at play. And this is why I'm putting you through this torture. Railtown or any company could be bought simply for, I haven't read this yet, but it could be just to take it away from the competition or just to make sure it doesn't grow up and become a competitor on its own legs or with somebody else. Grok has significant partnerships in deep-pocketed, I assume that's the Gulf, I can barely read it, companies with big clusters already deployed in the region. It also has sovereign AI deals inside and out of the Gulf, which may have looked attractive to NVIDIA. But one of Grok's biggest selling points so far has been that it is not NVIDIA, that it's a viable and inexpensive second source for sovereign AI infrastructure. That is likely now defunct, and future sovereign buyers will be subject to NVIDIA's negotiation tactics and supply chain constraints anyway. But what if Railtown and maybe Cohere and perhaps NVIDIA, what if they've broken the code on how to keep things sovereign? Maybe Railtown has a big entree into the Gulf. NVIDIA's biggest fear, here it comes. NVIDIA's biggest fear is that its hyperscale customers will design and build their own chips and systems. That's it. So they paid $20 billion because they're afraid that its own customers will design and build their own chips and systems, buried at the bottom of the article. And people may buy Railtown for that reason too. Langchain, Sequoia may do it. I hope not. I hope it's done by Microsoft at $40 billion. And get to the NVIDIA's motives for all but acquiring Grok may include a desire to stop one of these hyperscale customers from buying Grok. That's another reason someone might buy Railtown, to stop somebody else from buying it. whether in Grok's case, whether for its IP or infrastructure deployed. Something at the scale and maturity of Grok's hardware, software, and deployed assets could have made a big difference at Meta, Microsoft, or even OpenAI, where in-house hardware plans are still pre-tape out or have had modest success so far. So NVIDIA doesn't want Meta, Microsoft, or OpenAI to build their own chips, basically. So they bought Grok. What if Google ADKs doesn't want competitors to build out their own chips, like a Microsoft? Microsoft doesn't have anything that compares, as far as I know, to Google's ADKs. What if Google doesn't want Microsoft to be able to compete? They might buy Railtown. Does NVIDIA still truly believe GPUs can do everything? Question mark. Does this $20 billion deal mean AI is a bubble? Question mark. Or is not a bubble? Question mark. What does the figure 20 billion mean for the valuation of other startups? Question mark. For new entities in this space? Question mark. What does this acquisition mean for Cerebus's IPO? Question mark. What will happen to Grok Cloud? Question mark. We still have more questions than answers. Question mark. Oh, I already read that to you. Question mark. I thought this as a one-off was interesting. Well, let's get these here. Let's get these here. I thought this one thing was interesting as a one-off. Just, in other words, I didn't take the whole article. Purdue becomes the first U.S. university to impose AI graduation requirements. Purdue. home of the best chickens. All right, first let me show you this. This is Corey Brandolini's LinkedIn page. This is his activity. So these two, I didn't do the cookbook. I didn't do this. I didn't do the cookbook. But I did want to show you what he just put out there. I don't know when, a day ago. I don't know when. Mike Reinhardt's post. 10 years ago today, I founded Quisitive with a vision of what technology and people could achieve together. What began as an idea has evolved into one of the largest and most successful, this is the point, I think, of his posting this, most successful independent Microsoft partners in North America. So is it possible Railtown will go to the route of being independent? I don't know. But he's emphasizing, I think, the Microsoft partnership. This growth was not by choice. It resulted from trust, perseverance, and an exceptional team. To the Quisitive employees, thank you for, I hate that word, your passion, grit, and commitment to delivering outcomes that matter. Why couldn't you have done it with that sentence? I like the next sentence better. You are the foundation of everything we've built. To Microsoft, thank you for being a true partner and for sharing our belief that innovation only matters when it delivers results. Well, Railtown's all up in there, all up in here, all up in there with Microsoft. To our customers, okay, thank you. And to my family, thank you. As we look ahead, we're entering an AI-driven frontier, and Quisitive is uniquely positioned to be a frontier partner with Microsoft. Real world AI. Anyway, he posted that without my commentary. And then he posted Isaac Kim's post. And Isaac Kim said this, it's very interesting for our purposes. Technology, private equity, in its current form, est morte. A morte. Enterprise software is clearly important, but the core assumptions that underpinned the investment model are breaking down. Now, before I go further, this is the investment model with minus the exit that Constellation Software has used for 15 years. This is the model. They, instead of exiting by IPO, they just, I hate the word, they create the synergy crap, and they add the cash flow to their cash flow, and then they have access to borrowing or equity. They keep it in-house rather than IPOing it. But they create the value using this model. All right. The traditional private equity approach looked like this. Buy a mature software as a service business. Bingo, that's Constellation Software. Improve margins. Bingo. And this is the model, by the way, for AIP, but AIP is doing it in the AI space. Anyway, all right, so then you add leverage. Well, that's private equity. By definition, now, Constellation doesn't have to add leverage, but it did in the beginning. Borrow money. And then hopefully exit at a higher multiple. That's the model. That model assumes the underlying product remains relevant long enough for financial engineering to work. That's what private equity does. Financial engineering. Completely overpaid area. AI has changed that assumption. One, it is harder for mature software as a solution companies to grow. In large part, my eyesight, it's very small. It is harder for mature SaaS to grow in large parts of enterprise software, particularly horizontal apps and infrastructure. AI is replacing legacy systems. AI is replacing legacy systems. 5 to 10% growth rates for SaaS, software as a solution, are no longer assured. So it's like the energy vault model. You buy low, 5 to 10%, maybe 15% or returns. You put them all together, leverage it, and then that 5 or 10% turns into 40% because you borrowed money. It's all leverage. That's the private equity model. We are already seeing companies rip out. Listen to this. We are already seeing companies rip out or change legacy systems, legacy software systems, shifting from SaaS to AI, shifting from SDKs to ADKs, shifting from whatever's there now to orchestration frameworks and agentic agents and all the other stuff. I mean, it's so big. Take Broadcom. They transformed their IT management function with MoveWorks AI, a former LSVP Portco, driving 88%, well, whatever, sounds great. In this environment, owning a cash flowing, quote unquote, cash flowing software asset is not a moat. It's not safe. If the product itself is being structurally eroded. Now, what I ask you to think about here as possibly his reason for posting this, this buttresses the value of the AIP network. But if you take it one step further, I'm not sure this is what he means. I think it makes Constellation Software a buyer of Railtown or a buyer of the AIP network. Two, traditional private equity does not have playbooks, which they learn at their business schools, for improving margins with AI. Large tech private equity firms talk a lot about AI, but few execute. While a handful may figure it out, most will not. Knowing which tools actually work and how to rebuild products and workflows around them requires daily exposure to AI. Who does that? Railtown, Roadhouse. They've been doing it for 6 years. Traditional private equity firms typically lack that connectivity. Many recognize this gap, which is why they are building relationships with firms operating closer to the tech frontier. Yeah, whatever. Number 3, exit valuations are lower for SaaS companies. Public markets are no longer rewarding the end state that software PE, private equity, produces. Mid-single digit growth and high EBITDA margins. EBITDA. I guess that's what private equity produces, kind of single digit growth and I guess high EBITDA margins. This is viable across mature software categories such as ZBM, marketing automation, and HR software. Yeah, HR. AI companies often get 50 to 100x multiples in private markets. 50 to 100x multiples in private markets. While the average public software multiple is 5.5x. Public software is an SaaS. Over the last 3 years, the average enterprise software IPO was $800 million in revenue, growing 22% with 9% EBITDA margins. 9%, it just doesn't sound that big. Many PE-backed software businesses have those metrics flipped, which can make them unexitable. So what's next? I believe traditional tech PE will be replaced by AI-led transformation. We are already seeing this in service industries like accounting, insurance, brokerage, and tax services. These markets are fragmented, workflow heavy, and labor intensive. Investors are acquiring multiple small businesses and rebuilding them around shared AI workflows and infrastructure, automating document processing, onboarding, renewals, and billing across the entire organization. It's very small to read for me, sorry. This approach works because value is created through transformation of business models with AI. Growth and margin expansion come from changing how work gets done and freeing up people's time, not just from financial engineering. Call this new model something else if you want, but technology, private equity, as it was practiced, is over. It is over. Over. We're over. We are over. Oh, Lord. Why do I put myself up to this? I could be out panhandling instead of this. This is so much fun. I'm kidding. I'm kidding. So that's 5, 5. That's 592 there. 591, 590. 589. There's 588. All right, I think I start with 588. Okay, this is written by Samba Nova, January 5, 2026. AI is no longer about training bigger models. It's about inference at scale. Scale, that word scale comes up all the time. NVIDIA data center is ready for scale, but Railtown built everything they built for scale, for scaling, for rapidly going up the ski slope in reverse. Large language model development typically has been divided into two distinct phases, the massive and the gassive. The massive, capital-intensive undertaking of training and the operational utility of inference. So training versus inference. For years, the industry's focus and investments was dominated by the race to train larger models on larger data sets. However, as we move from experimental chatbots to production-grade agents, the economic and technical perspective is shifting. We are entering an era where the value of AI is increasingly derived not just from the static knowledge ingrained during training, but also from the compute applied at the moment of query. That's kind of real time. Understanding the mechanical differences between these phases, particularly the evolving complexity of inference, is critical for developers building the next generation of AI applications. Is deconstructing the modal or the model life cycle. The architect efficient AI systems, two architect efficient AI systems, it is necessary to distinguish between the learning phase and the execution phase. Training is the process of teaching a model statistical patterns from data in deep learning. This involves back propagation. I hope that's done in private. And the optimization of model weights over many epochs. Here's the chart. Global spending and annual growth rate of training and inference, 2024 to 2029. The navy blue is training. The sky blue is inferencing. So the growth in spending is pretty massive. If I read it correctly, by the end of this decade, training is going to be almost $40 trillion, and inferencing, using it, I guess is what they mean, is 70 trillion. That, my friends, is a lot of lobster. Training is the process of teaching a model statistical patterns from data. In deep learning, this involves backpropagation and the optimization of model weights over many epochs. Pre-training. This is the heavy lifting. Ingesting massive corpora, trillions of tokens, to learn broad representations. It is the computationally expensive. It is computationally expensive, requires massive GPU clusters, and runs for weeks or months. Post-training. Once the foundation is built, the model undergoes adaptation via fine-tuning or reinforcement learning. While less resource intensive than pre-training, it is critical for aligning the model with specific tasks or safety guidelines. Inference, as opposed to training, inference is the application of that frozen model to new unseen inputs to generate predictions. Unlike batch-heavy nature of training, inference is often real-time and latency sensitive. It relies on forward passes to predict the next token sequence, the next token in a sequence. As models move into production, the compute spend on inference is estimated to eventually dominate the total cost of ownership, accounting for 80 to 90% of the model's life cycle resources, or the model. I don't know how they pronounce that. By the way, this is Rail Engine. It's other things too. Let me show you that chart they have there. Or maybe I didn't do it. I guess you can see that AI training is all this complicated input, and then inference is just the human being working with a robot or whatever. The rise of test time compute. Pre-training, training, and post-training of AI models are also referred to as scaling laws, because they can dramatically improve the accuracy of AI models as you continuously add more data. The third scaling law, pre-training and post-training being the first two, the third scaling law for the AI industry is test time compute, which refers to giving models more time to think when running inference, which will result in higher accuracy. Current research suggests we are hitting diminishing returns on pre-training scaling. Significant performance gains are now being realized by allocating more computation during the inference phase. These include chain of thought reasoning. Do you see where Lang chain gets its chain? Chain of thought and reasoning, allowing the model to generate intermediate reasoning steps for thinking tokens before arriving at a final answer. I don't know why I'm having a hard time. Retrieval augmented generation, RAG, dynamically fetching relevant context at runtime to ground the model's responses, rather than relying solely on memorized weights. So instead of relying on memorized patterns, pattern recognition, their RAG brings real time to it, I guess is one way of saying. Adaptive computation, systems that determine per query whether a fast, cheap response is sufficient or if a complex, multi-step reasoning path is required. Then they gave a chart. Chain of thought reasoning, think before answering, which is good advice in and of itself. RAG retrieval, retrieve and generate, go into the files. Adaptive computation, makes a choice. Simple input because it works. Or do we have complex input? So it does a bunch of multi-step reasoning, decision making. I don't know. You guys probably understand it better than I do. Using these techniques can significantly improve the overall cost to performance when using AI models. But when taking these approaches to production, speed and efficiency of the inference are vital. And all I can tell you, my interpretation of during my conversation and other things with the company, input, interaction, Railtown adds to speed and efficiency, but of course so do the NVIDIA chips. By running AI models faster per user, again, that's Railtown, this allows these test time compute systems to think for longer and generate better results. And inference is not just one monolithic system, like today's liberal press. It is composed of many different phases and optimizations to get the most out of AI infrastructure. The anatomy of inference, pre-fill and decode. Just like training can be broken down into two phases, inference is composed of two distinct phases with opposing computational characteristics, pre-fill and decode. The pre-fill phase, compute bound, when a user sends a prompt, the engine processes all input tokens in parallel to build the key value cache. Because the attention mechanism has a quadratic cost relative to input length, this phase is highly compute intensive. The primary performance metric here is time to first token, meaning latency between user hitting enter and that means how long it takes for the user to hit enter and the first character appears. The decode phase, memory bound. Once the pre-fill is complete, the model generates the output one token at a time, auto-regressively. Each new token requires reading the entire model weights and the growing KV cache from memory. Because the arithmetic intensity is low, this phase is bottlenecked by memory bandwidth, not raw compute. The key metric here is how fast you can produce tokens, time per output token. These phases are very different from each other in terms of compute requirements. Today, prefill and decode typically run on the system one after another. However, there are experiments today having dedicated systems for each phase. And this is the chart coming up for the next paragraph. It's the prefill phase, input prompt data block goes into the chip, goes to whatever vector, whatever, and then the decode phase, T1, T2, output tokens. This is all swell. It's all swell. Why didn't I think of that? While processing inference, the system is not just locked to serving one prompt. With continuous batching, user prompts can be combined together and processed in parallel. This optimization allows systems to achieve higher performance by processing even more tokens. While batch processing improves the overall total token processed by a system, it does mean that each individual request will have a lower total user speed. I'm going to skip the rest of that. Delivering the best inference with SambaNova. The future of AI lies in infrastructure. As the market shifts from experimental trading to high volume, real-time application deployment. So this is the shift that's coming. We're going into a high volume, real-time application deployment. The infrastructure must evolve to support test time compute. To me, that's real time. And agentic workflows. That's real time, efficiently. All right, I'm going to skip the rest because who cares about SambaNova? Who cares about SambaNova except for Intel? All right, I wanted to show you that, but I'm going to skip that one. It's so long. It's just so long. I don't have it in me to do another long one. I just don't have it. But I can do this one. I'll do this much. This might be enough to call it a night. I'll check your messages, of course. Okay, so I think this starts. This is important. I asked this question the other day. TELUS, this is a completely different topic. It relates to the NVIDIA chips. Yes, TELUS has a partnership with NVIDIA to use its AI chips, initially deploying Blackwell. But, and this is, I think, so critical, the new Vera Rubin platform is designed as its successor. And TELUS, as a major NVIDIA partner, will naturally adopt it, Vera Rubin, as it becomes available, significantly upgrading their AI capabilities for Canadian businesses by reducing costs and increasing performance for advanced AI workloads. Key points. TELUS became NVIDIA's first North American cloud partner in early 25, building sovereign AI factories with Hopper and Blackwell GPUs in Quebec and BC. Blackwell to Rubin transition. NVIDIA's new Rubin platform featuring the Vera CPU and advanced interconnects, is the next generation, promising massive cost and performance improvements over Blackwell. Well, you don't want to open that up and not have the massive cost and performance improvements provided by Railtown. All right, expected adoption. As a key player, TELUS is positioned to integrate Rubin into their AI infrastructure as soon as it's available in the latter half of 2026, replacing or upgrading their existing Blackwell systems. So there, later this year, Blackwell will be replaced with Rubin, or that's how I read it. The benefit for TELUS, adding Rubin will allow TELUS to offer significantly cheaper and faster AI inference and training, which we just went through, essential for advanced models like whatever, keeping them competitive in the AI market. All right, so that's exciting. I know that was something you were just waiting to hear. Jensen Wong says NVIDIA's new Vera Rubin chips are in full production. You knew that already. But this Wired article says the chip giant says Vera Rubin will sharply cut the cost of training and running AI models, strengthening the appeal of its computing platform. They will come for NVIDIA and they will stay for Railtown. NVIDIA CEO Wang says the company's next generation AI superchip platform, Vera Rubin, is on schedule to begin arriving to customers later this year. Quote, today I can tell you that Vera Rubin is in full production. We heard that 2 days ago. Wang said during a press event Monday, Rubin will cut the cost of running AI models to about 1/10. Can you imagine they're already having Moore's Law? Some kind of Moore's Law? To about 1/10 of NVIDIA's current system, Blackwell, the company told analysts. NVIDIA also said Rubin can train certain large language models using roughly 1/4 as many chips as Blackwell requires. Taken together, these gains could make advanced AI systems significantly cheaper to operate and make it harder for NVIDIA's customers to justify moving away from NVIDIA's hardware. They will come for NVIDIA and stay for Railtown. NVIDIA said on the call that 2 of its existing partners, Microsoft and CoreWeave, will be among the first companies to begin offering services provided by Rubin chips later this year. 2 major AI data centers that Microsoft is currently building in Georgia and Wisconsin will eventually include thousands of Rubin chips. Imagine if Microsoft finds out because they're in partnership with Railtown, that at the data center in Hoosier-Mooski, Quebec, Railtown is the best. And Microsoft doesn't have this ADK. What if they determine it's the best? I know that's an assumption, that's a guess. But what if they do, when they get down to Georgia, they might say, you know, y'all should come down here. And next thing you know, Railtown is down in Atlanta. Microsoft is currently building in Georgia and Wisconsin. These data centers will eventually include thousands of Rubin chips. Some of NVIDIA's partners have started running their next generation AI models on the Rubin systems. The semiconductor giant also said it's working with Red Hat. Okay, can we skip that? The latest chip platform is named after, we'll skip that, we know that. Each part of this chip system is completely revolutionary and the best of its kind, said Wang. NVIDIA has been developing Rubin for years. They'll begin arriving in the second half of 2026. It's unclear what NVIDIA means by saying that Vera Rubin is in full production. Typically, production for chips this advanced, which NVIDIA is building with its longtime partner, TSMC, starts at low volume while the chips go through testing and validation and ramps up at a later stage. This CES announcement around Rubin is to tell investors, quote, we're on track, says Austin Leons, analyst at Creative Strategists. See how many analysts follow these stories? The short complex cannot win, but there aren't any of these people or any of these articles buttressing a G-Buck story. It's just a different class of clientele. So NVIDIA's on track. There were rumors on Wall Street that Rubin was running behind schedule. Leon says, so NVIDIA is now pushing back on that rumor by saying it has cleared key development and testing steps and is confident Rubin is still on course to begin scaling up production in the second half of 26. In 2024, NVIDIA had to delay delivery of the then new Blackwell chips because of a design flaw which caused them to overheat when they met Vera Rubin. As the AI industry rapidly expands, software companies and cloud service providers have had to fiercely compete for access to NVIDIA's newest GPUs. And guess what? Railtown's already sitting there on top of the newest via TELUS. Demand will be just as high for Rubin, but some firms are hedging their bets by investing in their own custom chip designs. OpenAI, for example, is working with Broadcom for the next generation. But Leon says today's announcements demonstrate how NVIDIA is evolving beyond merely offering GPUs to becoming a, quote, full AI system architect spanning compute, networking, memory hierarchy, storage, and software orchestration. What is Conductor? What is the purpose of Conductor? Orchestra. Why is it called Conductor? Orchestration. Why did they come up with the name of Conductor? To lead the orchestra. What if NVIDIA buys Railtown after they see how well it works? Even as hyperscalers pour money into custom silicon, NVIDIA's tightly integrated platform is getting harder to displace. Here's Lauren Good. She's a senior correspondent in this space, 30 years old is senior. All right, so where did I get this one? Anthropic's Claude Code hits $1 billion in annualized revenue within 6 months. Anthropic disclosed a significant commercial milestone. All this AI is scaling much more quickly because the infrastructure is there. Internet took a long time because they had to build it all out, and mobile and all that. The broadband all had to build out. It's all in place. The tracks, so to speak, are ready for Rail Engine to run on. Anthropic hit a big milestone. Claude Code has reached 1 billion in annualized revenue within 6 months. It ramped up. I'm not saying that Railtown is equivalent to Claude Code, but it can happen. It can happen. And it's going to be, yeah, anyway. Anthropic just 6 months after general availability. So this high ramp-up speed can happen. And I'm sure the market is telling you that. To accelerate further, Anthropic made its first acquisition, acquired Bun. All right, let's skip Bun. Anthropic is targeting $9 billion in annualized revenue by the end of last year. Internal targets of 20 to 26 billion in revenue for this year. Company expects profitability, they're not even profitable, profitability in 2 years, which is years before OpenAI, and they're going to do an IPO. Developer tools are proving to be listen to this is Railtown. Developer tools are proving to be a massive AI revenue category. That's all Railtown is. Developer tools are proving to be a massive AI revenue category. For engineering leaders, the AI coding assistant market, again, Railtown will be under every AI coding assistant, at least in my dreams. But even if they have to share it, not every car on the highway is a Lexus. The AI coding assistant market is now generating billions in enterprise spend. Where does the enterprise spend go? TELUS and NVIDIA. They'll come for NVIDIA and stay for Railtown. Jensen Huang doesn't care about Sam Altman's AI hype fears. He thinks OpenAI will be the first multi-trillion-dollar hyperscale company. And if you want to dream a bit, what if Railtown catches just a bit of that hyperscale business? I don't think Railtown will be around. Somebody else will buy him. And Masayoshi-san and Sam Altman see no end to AI demand and scaling. So I think, just like Soul Train or the Peace Train, it's time to get on board. Railtown is 0.2466 on the close. No. I was wrong. It actually had a slightly green close, 0.2476. 256,000 shares. And Michigan is down a penny at 77. Next strip is down 4 cents at 337. Who's Your Finger is up, or Use Your Finger is up a penny at 132. GNS is still loitering on my screen, but it's down slightly at 63. It's down 0.0001. It's under attack. And they want you to see red. But what difference does it make to a real seller if they sold GNS at 0.6346 or 0.6347 or 8? And they always want the lower price. They never want the best price or a good price. It's all manipulated. These stock prices aren't telling you anything. They're just not telling you anything. The Dodgers signed Andy Ibanez in breaking news. Well, there's stunning new footage from ICE agent at the center of the Minnesota shooting. Shows what really happened. So I'll let you go find that. Marjorie Taylor Greene explodes in astonishing F-bomb tirade as Trump orders Secret Service probe. And it rapidly descends into whether or not Kendall Jenner is lesbian. I don't know what's going on. There's no news anymore. Yankees made first real off-season move with bullpen claim. They claimed Caleb Ort off waivers. That doesn't sound earth-shattering. All right, I might be done. Let me go with your comments. Ward says data center in Kamloops is not running yet. Okay. But I understand that's supposed to turn on soon too. Okay, see, you know all this stuff. The Rimouski data center opened on September 23rd and serving customers. So maybe the Kamloops data center opens in February. But what ADK are they using? Or they don't need an ADK? Things to be revealed. Well, they'll have some Railtown. Anyway, I think it's all a dress rehearsal. That's my opinion. It's a soft open. It's like a restaurant, you know, just running through the paces. That's my opinion, but we'll find out. Jack, hello again, William, Mr. William. Picked up 11 more. I love it. Keep the pressure on. No, I think it's great. I think that's great. I think that's great. You're almost up with Donna. You're almost up with Donna. Thank you, Red Pepper. My sister was great. She actually had a great time and enjoyed it. She we always end up at some point talking about our shared childhood and other experiences. But she this I guess was describing herself, and but she said what one friend told her. She has a lot of the internal anxieties and messaging and things that I have, and she called it attachment anxiety, something like that. And it was interesting when I think through some of my recent um, uh, sort of, without describing it too much, but some of my pretty some painful anxiety and doubt and I don't know. I don't want to say too much that I've been going through. When she described it, I said, maybe it is that. Maybe it's I'm reliving some ancient injury. Can a bee, can half a bee be said to be if the bee or half not? Can half a bee be said to be or half not be due to some ancient injury? William, the Reuben will run 1,000,000 times faster than the Blackwell, and the Reuben Ultra will run 1,000,000 times faster than the Reuben. Reuben, I've been thinking. Is there going to be a role for human beings? Is the next thing Skynet? I do have another thing, two things I was going to go through, but I'm not going to do it. I think that was plenty. That was plenty of information, and um, you probably um, you probably didn't enjoy it as much as I didn't enjoy it. No, I don't know. All right, I'm going to say goodnight. I appreciate everybody tuning in, and I think it's exciting. I forget what I wrote, but the key thing here is I think we have a perfect storm of a couple of guys got together knowing what they're doing, and they had the vision to create something that would be needed in the future. They did that. And obviously, it's highly competitive, and there's plenty of people out there thinking, like the guy from Langchain, who also came up with a great idea. So it's hard to be right out of the gate first. There's 20 horses at the Kentucky Derby, after all. But the for we happy few, we band of Railtown survivors, the fact that the company went early, they needed to raise money, so they went public. And of course, they get into this hell created by the banks and the criminals and the regulators. It's inexcusable. It really is inexcusable. But it's made for the benefit of a few men out of Burroughs Park and some offshore gigolos. And hey, it's got to be great. Anyway, so because they were public, they're not on the speed dial down in Palo Alto or somewhere else for Madison Dearborn and Benchmark and all that. So they're not in that private equity channel, which you can't get into. I can't either, or not, not in a direct way. So, and the private equity, as it goes up the channel, all those multiples are being taken for the fund performance, but also they're just creating, just like they do everywhere, which that's why I think about it. Might be all a big house of cards, but as they're puffing it all up, you can participate. And then simultaneously on the other side of the non-functional market, these computer selling programs walk down the price, aided a bit by the fact they know there's nothing coming right away. But it might now. We're getting very close. Maybe, I don't know, next couple of weeks, 3 weeks, 4 weeks. So the price is down. So you not only can you buy it, you can buy it, I think, at a, let's call it a seed round or a series 1 round valuation. It's incredible. So it's a perfect storm. And then you've got, and I think Ward's right that because I have said that they have 3 applications on that data center already. So it's got to be open. But I might be right too, in that it might just be the soft opening, and then they'll really go out and market this data center maybe in February when Rail Engine is ready. Although I think Ward makes a good point. They can probably go without Rail Engine. But I think it's pretty clear they want to issue, because whenever you take something out of box, you want to play with it. If you have my personality, I think developers would want to run it through the paces. So I think February is when they will ramp it up. But anyway, you're able to buy, you're able to buy it. 2, you're able to buy it at a seed round before it's even got giant valuations, if it ever will. But the next step is the data center, and the catalyst that could happen before that is a buyer could show up, research could show up, or TELUS maybe, or Railtown puts out something newsy. But in all likelihood, the real thing that kicks this all off in terms of visibility is that data center. And that's probably when they really pump up the volume, is probably February sometime. And yeah, we got to get there. But then if revenues ramp up, quickly and visibly and repeatably, it's not going to take too long for some buyers to come in there to Railtown. So it's a perfect storm. It's just a perfect setup for a trade to get you out of here. So anyway, with that, I'm going to sign off, and say peace to everyone. And I hope you have a good weekend. Today is Richard Nixon's birthday. That's a key thing to remember. All right. Ciao, Bella.